HOO. Robinhood, hearing it's an investor's business daily swing trader buy. That's Hotel Oscar Delta. Shares of Robinhood moving higher now. HOOD.
Ooh, yeah. Good morning, everybody. Good morning, everybody. Boop, boop. How's everyone doing? Oh, I feel like I'm super low right now on my desk. It's okay. All right, ladies and gentlemen, good morning. It is Friday, almost quarter end. I believe Monday will be the last trading day of the quarter for September. Woohoo! And then we get up to some more earnings. And I love earnings season. Not that I trade earnings, but I love earnings seasons because a lot of good setups arrive after earnings. Dokies, artichokes. Doki, artichokes. We'll take a look at the S&P 500. We'll go up over some various names that are on the radar. What's going on in the markets and shuffle. Let me just check my mic stuff here. Test. 1, 2, 1, 2. Looks good. Then let me just bring up my Twitch chats. Twitch TV.
Works in this?
Ooh. All right, there we go. Twitch chat is live. What's up, Eco? What's up, Tony? What's up, Jossie? What's up, LJ? What's up, Peter? What's up, Larry? What's up, Sansa? What's Jalen? And what's up? It's Ace. All right, so let's take a quick look at the markets overall right now. Just look at the S&P 500 and some of the other products. Currently, Gamma Flip Line is at 56.66. The Gamma Flip Line lets us know how dealers are going to respond and react to price. When we're above it, which we are, we look to buy the dip, sell the rip. Okay, if you didn't watch my little YouTube short yesterday, I talked about that. So go watch it. Market net flow today is all over the place. This is choppy. So market net flow is not really giving us any data. Okay, so I wouldn't read too much into this one. It's the red line's above the green, so it's currently bearish divergence. There's no convergence, so the price could be potentially move counter trend to this, but it's been flopping around left and right. As far as the SPY goes, let me look at the strikes here. It's 575 is going to be kind of a main area of focus for the SPY, which is a few dollars higher. That's up north towards the daily expected move for the day. Price action is getting fairly tight right over here too, as well on the chart. But let's take a look here. 574 is actually looking like it might be a pretty tough area to break through. So I think that would be the key level to watch. 574 for a break, at least for right now. I'm gonna go ahead and put 574 on my screen. Right there. This right here is a gamma exposure level, and you can see that we've came up to it, we've kind of rejected, came up to it, rejected, and this big bar of gamma can repel price. So if price is below it, you can push it down further. If price gets above it, it may help to elevate the price further into the daily expected move or upper weekly expected move. We haven't even tagged the weekly expected move. Volatility has been coming in quite a bit so far. And that's simply because we've been above a rising 5-day moving average. Check. And then we've also been in positive gamma territory. Check. This is, like I said, when dealers buy the dip, sell the rip, volatility typically comes in. If we take a look at the VIX, okay? This is when we went into negative gamma territory right over here. And when we got out of it, volatility kind of just came in a little bit, all right? So when we're back below the gamma flip line, you'll see here on the screen, these are the times highlighted when we were in negative gamma or when we flipped below the gamma flip line. And each of these times, it kind of gave us insight to saying, hey, we could potentially see more volatility. And just because it's higher volatility doesn't necessarily mean that's a bad thing for the markets, because you can have volatility and price action move hand in hand at various times too. Typically what it means is you get, when you're in negative gamma, you get stronger moves to the downside, followed also by stronger moves to the upside, which we've shown plenty of times in a rate of change chart. Typically when you're in a bear market or a negative gamma, you'll have days that are like -2% down, but then you'll have a day that's up +2%, and they're like really close to each other. It's very common in negative gamma territory. What's up, Low Set Match? What's up, Max? How do you see the gamma flip line without options? Max, if you're in the Discord, you can actually type in the query channel. If you're not, I mean, that's probably one of the less expensive ways to do it, is because the thing's only $9 a month and you can always pull it up and get other data too. If not, they have different services that aggregate the data. You might be able to find something free online. I don't know what the source would be. You know, maybe search gamma flip line, maybe on Twitter or something like that. Maybe somebody posts every once in a while on Twitter, and you might be able to find it there, but the sources may change. And then also, I talk about it pretty much on my market briefs, and I post it pretty much daily in my Discord too as well. So I'm sure that there's ways to figure that out. I'm gonna check one thing here really quick. I'm gonna check my X. Am I live on X? I am live on X. Oh my gosh. Give me a second here. I don't understand the chat on X though. Testing chat. I just never get chat on X. It's very weird. We get YouTube chats, Twitch chats. What's up, FT? There's only 6 viewers on my Twitch. I used to have a lot of viewers on Twitch. I don't know what happened there. Whatever, dude. What's up, Oscar? All right. Is UAL the new meme stock? You know what's funny is...
Why Bristol Myers Squibb? Bristol Myers not presenting new data from 2 trials.
The hell?
Sotyktu efficacy to severe scalp psoriasis in a real-world setting.
Yo, stop that.
Michael Yankee. Secondary endpoints met with...
Hey, is that audio coming in all funk? That was weird. Let me try that again. Test. Okay. Weird. I don't know what that was. But now it's like the audio is all down there. Am I even live right now? It says that I'm live. Man, I keep on running into problems on this stuff. Maybe I just got to get a PC. Okay, so yeah, as far as the S&P 500 goes, let's take a look at the more specifically the SPX. Hey, what's up, Ronald? The SPX, we are floating in and around 5750. So the last time I kind of hopped on here was when we talked about how this was the main call wall, right? The main call wall, 5750. Let me go here, and you can see it. It's just this gigantic pull of gamma exposure right now, and there's a lot of gamma, right? You know, at this moment. So what happens here when we get a level like this? It's very common for price to pin around. And now this has been the level, and we talked about it when it came up here, and we said it's going to be hard for price to really break from it if we don't specifically see traders reach out further. And what are we seeing? So we rejected from it. We rejected from it. We're putting in higher lows throughout that course. And then finally we got this breakaway moment, and it got pulled right back in, this is super common to see when you have a lot of gamma exposure. It ends up being like a pin for the market. So we pulled in, we came back, we doodled around, and now we're trying to break from it once again. So to come back into 5750, I mean, it's highly likely, but if we are going to actually break from it, the level to watch would be 5800. There are traders reaching out there, but not much. And then the problem here is you have so much exposure at 5750 and there's like nothing below it. So if you start falling off, you know, the 5750 level, where you want to pay attention to is 5700, and that would still technically be above the gamma flip line. So we're really kind of honed in on this 5800 down to 5700, and it's kind of like, okay, if we're, you know, above 5750, we'll bullish to 5800, but if we're below it, proceed with caution because you may get a nice little thrust type of move down to 5,700. Very interesting place to be as the market. There's various stocks that have been setting up very nicely and trading very nicely too as well. But I think we just got to be not fooled by any sort of breakaway moves. Like for example, yesterday we had a big gap up, right? We had a big gap up, and what happened? It started to fall flat on its face. Let's take actually a look at the daily chart for I don't know, Qs, IWM, and so forth. So here's SPY on the daily time frame, right? And what you'll notice here is once we went really into positive gamma territory, you're seeing a lot of these little tiny little doji candles. Very, very common to see these little tiny doji candles when volatility, typically subsides. You have a lot of tiny up days, right? But then all of a sudden, when volatility picks back up, you get one day down and it wipes off 1, 2, 3, 4, 5, 6, 7 days of price action. So there's a lot of shakeouts that can occur, and that's just part of the game. That's totally fine. So what do I like to do? First and foremost, if we are in positive gamma territory, if we're above that rising 5-day moving average, I always look to add exposure to the market. So if you have various stocks you want me to pull up, I'll do my analysis on them on the daily and smaller time frames if you want. So when I'm looking at just the market, I might go like this. I'll anchor a volume weighted average price here to when we started to get some decent volume in the market and we had this big outside day. So on this specific day on the SPY, you can see that we've been holding this and we haven't tested it. So my thought is if the market wants to pick up and see a little bit of sell side activity, scare some people, right? We went up, 1, 2, 3, 4, 5, 6 days, very tight price action over here. But one day, 2 days, who knows, comes down into this lower anchored volume weighted average price. I'd be paying very close attention to that level because it also is kind of in confluence with the back test of this breakout to all-time highs. Okay, not to say that it's going to happen or how it's going to happen, but that would be a level of interest that if you start to see sell side, you can be like, oh yeah, where can we potentially fall to? Okay, this level might make sense to watch.
There's a GameStop seeing a spike in price up 2.5%. That is GME, Golf, Michael, Echo.
Michael Echo. So if that were to occur, then I would just kind of go into the intraday time frame. So we can use the let me change the settings on this. Let me look at the canvas. I want to add a little watermark here. I'm going to go ahead and go hit settings, and I'm going to go ahead and hit like that. I'm going to go ahead and apply to all, and I'm going to go ahead hit okay. So then I'll look at the intraday timeframes. These are just various products. We got SPY, Qs, IWM, Dow Jones Industrials, XBI, semiconductors. And the 5-day moving average is right here. This is a 30-minute time frame. Okay, 30-minute time frame. I use the 65-period MA. This is something that I learned a long time ago from Brian Shannon. Just a great resource of information there. If you don't follow him, make sure to follow him. So as long as if price were to come down to those levels, that swing low or whatever, I would be then looking to see if price action on the 5-day moving average could flatten out and start to turn back up. So that would be the downside thing that I'm watching. Take a look at XBI, right? So XBI is down here, right here. Okay, XBI. Now, XBI has been setting up pretty nicely on the daily time frame, and recently it got rejected. And now what are we seeing? We're seeing it come to retest this 5-day moving average. Now, the 5-day moving average is still declining here. So I'm not going to really run in to chase this, but I still like it from the daily time frame. So what I would like to see is maybe price to come back up and test. This was the swing low, and then also the month-to-date anchored volume weighted average price. So I'm going to go ahead and remove this, and I'm going to go ahead and add an anchor to this swing high over here. So, okay, this is pretty cool. So this is the month to date, that's September. September's coming to an end, but we can always keep this on our chart to see it or look at the quarter to date. But what you'll notice is they're kind of in confluence here. So what I would like to see is price action to get up here, maybe perhaps consolidate or pull back and put in a higher low in something like XBI. The 5-day moving average to start flattening out and then potentially break through these levels and start to turn back up. Now, if I show you the daily time frame for XBI, take a look here. I mean, this is a great looking chart. And even on the daily time frame, if I was to ignore the 5-day moving average, I mean, this does look like it's a pretty good setup here, right? It's starting to break through the high of yesterday right here. So yeah, maybe perhaps this does set up for a nice little pop here. And more specifically, if we look, a little bit larger time frame out, what we'll do is we'll go ahead and not use white. We'll go ahead and do blue, and we'll go ahead and make it 2 and put on a clue if you know what I'm true. Okay, so on the daily time frame, you can see that we found supply up in this area. We put in a low. We came back up. We found supply again. We put in a higher low. We came back up. Found supply. We put in a higher low. We came back up and touched it again to the T. We got rejected again. So this right here, it's setting up. And if you want like early entry, I would be looking at that 5-day moving average for price to recover, for it to start turning up, maybe potentially play it right back into here, consolidate, and maybe it's setting up for a larger breakout of this big pattern. And if that's actually the case, you can actually measure this is just a technical measurement. It doesn't, to give you a potential target, it doesn't mean it's going to get there, and it might not be, and if it does get there, it might not be an easy path. But if you just double the base of this breakout, XBI can see it up at like 125, okay? Which is, I don't know, how do you use, is this a measurement tool? I don't really know. No, that's not a measurement tool. I don't even know. I'm still trying to learn this price range, date and price range. So basically from where we are right now up to this level, I mean, that's a 26% increase. That's pretty huge. And then if you want to like be more, tactical about things, you can go into XBI, you can go into the Analyze tab, and you can say, okay, what is in XBI? What are the components of XBI? Because maybe you don't want to tie up that much capital in XBI by itself, but maybe you want like the exposure and higher beta so you can use less capital, and you can be like, okay, here's the top 10 holdings. We got United Therapeutics, so UTHR, you got EXAS, you have ALNY. ALNY, man, I haven't heard that name for a second here. I actually want to pull that up. Yeah, ALNY looks, I mean, these stocks look pretty good. You had a big earnings move, consolidated, another breakout. They're choppy, that's for sure. But, if I were to, I don't even know how to draw a channel on here. Maybe I'll just do this and see if that works. Hey, there you go. Pretty cool, right? So it's on a channel, and it's kind of flagging out right here. So putting in higher lows, higher highs. So maybe play it back up into this upper channel. It's obviously an expensive stock there too, but you can go through that list and kind of
shares now retracing
see what
back,
happens.
still up about 1.57%. Not seeing any company specific news to justify the spike in price action. That is GameStop, ticker GME, Golf.
Yeah. So let's hop over to Qs, and then we'll get to IWM. Okay, so Qs, the level that we're watching for Qs was this kind of mid-range right here at about 485. It did break out, and we did try to come to fill this gap, so I'm going to go ahead and update this gap to basically right there. I mean, in theory, it depends on how you think of how gaps are closed. So technically, it did come in and hit this lower wick, but it didn't go to the closing price. So whatever, there's still technically a little open gap there, and they can act as resistance. So what are we doing now? The Qs are roughly at lows of the day today, and it's kind of pulling back in to this breakout area. So it's not down and out, but if you look, look where Qs came from. Qs went from down here to basically up here.
Pretty CNBC, Tanger Outlet CEO discussing consumer demand. There's ticker SKT discussing Nike, Tanger Outlets, CEO on CNBC.
Okay. So yeah, so price action is just kind of coming, and it's still holding this area. So this will be the level to watch over here. But if it does want to break down further and shake out some more people, I'd still be watching the swing low anchored volume weighted average price of this kind of big reversal day right in there. So Qs, it's looking strong. We'll go into some individual components of that in a moment. I want to first pull up IWM, and IWM was definitely on the radar. Do I still have a position in it? I might still have a little bit of a position in it. I definitely took some out today, but I forget if I... Give me a second.
Seeing a report on Reuters, multiple blasts heard in Beirut. multiple massive thick clouds of smoke rising from Beirut. That is coming from a Reuters witness.
Oh, my leg's asleep. Sorry, I'm just checking to see if I have a little bit of a position left in here. I guess I do, yeah. So I still have a little position, but that's almost basically nothing. Okay, so IWM, this is, okay, so I think when we talked about this one or when I put it into the trade ideas, it was probably right at around this level. And all I was watching for was to see if price action wants to break from this flag, right? So we saw a nice pull of volume, or sorry, a nice pull of price action, and then wanted to see if we anchor volume weighted average price to this swing low, if price comes down here, how it's going to act and respond. So it came down here, closed beneath it, which may be like a time to say, yeah, maybe I'll just wait to see if there's strength. Well, we gapped up and then we started to pull back into it. And at that point, this made sense to say, okay, now it looks like we're kind of doodling in around this area. Perhaps we can take an execute or a shot and just have a stop under this swing low, right? That's waiting for price action to show strength. Today we got this gap up. IWM's all choppy and stuff. It's very hard to trade. And we're seeing a little bit of a move further. So the target would be up back to this swing high and potentially break further if it can even get there. But right now it does look like it's trying to make a move, trying to break out. So there's IWM. It's holding up. Okay, where would my stop be? It'd be just under this swing low and then potentially moving it higher as time goes. It just depends on your time frame that you're trading. For me, I took a little bit of profits today. I'm not trading IWM. I used TNA. So that's kind of why I just trimmed it up. Okay. So there's that. We'll go into some individual components of, I don't even know how I did that, dude. That was crazy. That was cool. Okay, so we'll go into some individual components of the S&P 500, the larger market cap names. And then I'm going to go through here. So if you haven't yet put any tickers in the chat, make sure to do so. And then I can go over some other additional names. And then we'll go over the Sailor to Shift tool, Bitcoin, crypto, because those have all somewhat turned positive, I believe. So I haven't pulled that one up in a little bit. Shibbity-bidi-ba. Yeah, we're going to go over NVIDIA here in a moment. And probably some other names. Okay, so first and foremost, let's go to Apple. Now, remember, Apple does a lot of business in China. And China's been getting a lot of positive news. So perhaps this can be a candidate to play. I mean, I remember when China wasn't doing that good, Apple was also kind of a laggard. But Apple right now, it is getting pretty tight. The price action is getting fairly tight here. And you can see it's a pretty clear level of, I'm just going to draw it in on Thinkorswim, pretty clear level of resistance that we're getting held up at. Okay, so you can see we've tried to break from it, but once we got back under it, we pushed down and it put in a pretty substantial low. We tried to get back above it, but we closed under it. We pushed down lower. We went for it again, but we started to break down from it, and we closed, once again, lower, but they're all higher lows. Now, price action's getting pretty tight here. So my thought here is if we can actually start breaking above this, pretty much, I'm going to just call it 230.50, 230 and 50 cents, or just 230, whatever the case is. If we can hold above that, are we going to see an expansionary move
US SEC
to like
Commission says former
250
Chewy executive
in Apple?
conducted insider trading in 2021. That's THWY, Charlie, Hotel, Whiskey, Yankee.
So I think it's a possibility, and you can just manage risk as you see necessary. So it could be under this swing low if it holds before breakout, or you'd want to see a breakout before it breaks that low, or you give it more room and you just do a smaller position and try to play it up for a trend continuation. But right now you can see that price action's coiling up. It's kind of flagging out here. Try to go for a little bit of a breakout today. It's trying to hold up. So yeah, I mean, in my opinion, it looks healthy. If it were to not look healthy, it would start to break down this low and or this low, and then I'd say, yeah, just it needs more time. If you go into the smaller time frames, here's the 15-minute time frame. You can see it's turning yellow, which means what? The calculation is actually calculating lower for the 5-day moving average, but price is above it. So if price can remain above it, we're going to start to, lose some of the data. And as we lose more of this data going back 5 days and we can hold above it, it's going to start to turn itself back up, which can bring us right back up into these upper areas. So you can execute, even smaller time frames, see what is price action doing. It's pretty much hanging out right at the lows, right? So maybe not the greatest look right at this current moment, but it is still above the 5-day moving average. We just want to see it start to turn up. Okay. All right, Microsoft. What's up, AA? Shorting spot. Spot. Yeah, I'll pull up spot too. Yeah, I'll go over UAL and BABA and all those names. I'm going to go over some of the larger market cap names right now. I like Microsoft, but Microsoft has been kind of a dud, but not like in entirety. I think it's more of just a consolidation, but it's been a lot of fake outs. Like we've been seeing these gap ups and fading type of price action, a lot of red candles building, but the volume's kind of dried up a little bit here. But it's still holding relatively well overall, right at around that 430. Now, I want to show, I want to update more specifically Microsoft here on trading view so I can use this anchor volume weighted average price. But you can see here, it's really holding that 430, which is what's marked on my screen, or 429, this anchored volume weighted average price here. So we tried to get below it, but then we closed above it. And it's really just struggling to kind of break free from it. So I think that if we start closing underneath it, I'd be more cautious. But if we can, turn back up or hold above it, that would open the door to come test this prior swing high, which I think is a very strong possibility. If I were to draw out just a quick horizontal line, it's in confluence with, you can see it acted as supply here, it acted as supply here, and acted as support here. So really kind of this little area in here is if we start closing and breaking down, that might push us a little further. So what I'd look for is a U-turn back up, because it could be a shakeout or fake out, and just an overall consolidation of price action to potentially follow through on a larger move. If we go into the 5-day moving average, it still has not recouped the 5-day moving average yet. So if I go like this, you can see it's actually still calculating down as it stands. So you'd want to see price back above it. You'd want to see the 5-day moving average start to flatten out and start to turn back up, which would be a more positive sign. You can see since we've been broken below it, or since we kind of broke it over here and it turned yellow, you can see that it's kind of just been holding as this level of resistance. So overall, daily time frame looks to be consolidating, may need a little bit more time, but it is holding some key levels, and I'd be looking at that 5-day moving average to start turning back up. Let's go to NVIDIA, because NVIDIA is getting a little smoked today, down 3%. But really, what are we doing? Well, we broke out of this consolidation, right? We talked about this one, I think, on the brief, or some other various names that were still consolidating. And we went for a breakout, and we didn't quite break out. We closed on it, and we're pulling back in. So this is a breakout and could be just coming in for the back test. And the back test, if we see strength from it, could be a positive sign. Now, I want you to pay attention to a couple of things here. The 50-day moving average is flat to turning down. So the longer we stay above it, it's going to start to turn back up. The 20-day is also starting to make its turn here too. So maybe perhaps we just need more time, and it's going to be testing these lower areas, reconsolidating for potentially another leg higher. I would be watching obviously down here as the potential risk area. And if you have like a smaller position or you've been in it for a while, maybe your stop could be hiding, between one of these specific lows. If we go to the 5-day moving average, it is right now actually at the 5-day moving average. So let me zoom in here. There we go. So you can see the 5-day moving average is still calculating up. It's been kind of getting hammered in price right here. RSI is getting a little bit crispy right here to the downside.
Scripps News to cut more than 200 jobs, scale back national news programming amid difficult linear TV advertising market.
If price were to continue downwards,
SSP, Sierra Papa.
If price were to continue downwards, remember, if price gets underneath it, it'll start turning yellow because the calculation is still calculating up. Okay, so there'd be more of a cautionary sign. Now, there is a volume node here at about 119. So down here at 119 could be a potential area where we see a bounce with price action. And then below that, the volume point of control for, I believe, the last 10 days, 15 days, sorry, is 116. I'm going to round up. Okay, so these could be the levels, maybe 119, 116, potentially to see a bounce from. But right now, price action's pulling into an inclining 5-day moving average. So what we can do is, hop into NVIDIA and go even to a smaller time frame. Let's go into, actually, I'll go here. That's fine. Let's go 15 minutes. Go 15 minutes.
DirecTV, Dish reportedly close to reaching a merger agreement. That's ticker DISH, Delta India Sierra Hotel.
Okay, so here's the 15-minute time frame on NVIDIA. And what I want to do here is I just want to anchor a volume weighted average price to the daily time frame. So looking at this, if price action were to, it's very common actually to see price action retest the daily volume weighted average price at some point, but here's 119 down here. That'd be a pretty substantial, breakdown further. But if it were to come down here, not to say it will, but this would be kind of, a potential level where I'd look to see strength from. And if it doesn't come down there, if price starts turning back up, I'd be watching the daily anchor volume weighted average price, which is about 121. That's, honestly setting up for a potential trade, in my opinion, for a bounce as we're kind of just pulling in here. So let me see. I want to look at a couple other aspects. Market net flow doesn't really support much right now. Market net flow looks pretty bearish. So this changed quite a bit. At the start of this stream, this looked like very confusing. Now we have a clear divergence here in price. So I'd be a little bit more cautious than anything right now as far as the price action goes. So I'd be watching for NVIDIA 119, and then the lower level, which we talked about, was about 116, and then seeing how price action responds in and around these levels. But to see a bounce here in the near future, yeah, it makes sense. I just don't like executing when market net flow looks like that. I would want to see that change up a little bit. Okay. So there's NVIDIA. Let's look at Google. So Google, I think the last time we discussed this one was more around here after this breaking out of this trend line. And we are still above a rising 200-day, but the 50-day is definitely declining here. So it takes a while to refix these trends. So to see it pop up or come back down and trade around these areas, the 50-day is going to start to flatten out to turn back up. And that's what you want to see. And you want to see the 20-day to start pick back up too. So it may need more work here for something like Google to really kind of help fix the structure here. But overall, the longer term trend is still up. So I like Google, but I'd also prefer to see a little bit more time go by to heal some of the larger averages right there. As far as the 5-day moving average goes, we have the point of control right at about 162.50, and we're above a rising 5-day moving average. So if it pulls back into these areas, you can potentially look to see if there's strength, and you could play it on a shorter time frame, because the shorter time frame is, in theory, currently in a bullish trend right there. Okay, there's Google. Let's go Amazon. Amazon is throwing us a little bit of a cautionary sign here. There is a positive divergence on the RSI. It's getting pretty extended as we're seeing that sell side. Remember, market net flow is not looking all too hot here. 187-ish right here for Amazon could be a potential level to see a bounce at. And then you'd want to, right here is more of a proceed with caution area, right? Proceed with caution on Amazon. And this makes sense because Amazon's been on this monster run, right? So to see it consolidate or pull back a little bit totally makes sense. Okay, so I wouldn't read too much into the price action of this pull down. This is actually what you want to see after strong moves. You want to see some price consolidation. Meta also is at around the lows of the trading session today, and if we start breaking back down, I'd be looking for a back test of this breakout area, and then I'd look for the strength thereafter. 5-day moving average, you can see prices kind of just right in and around that area right now. On the 5-day moving average. So I'd say as it's still calculating up, if we start getting below it, then I'd say more cautionary. But right now it's just kind of consolidating in and around those levels. So this one looks more relatively stronger. Tesla's holding up rather well today. And Tesla is above a rising 5-day moving average. As far as the daily time frame goes, the couple times that we talked about it from back here, from this breakout point, and then also this level was the more recent. We saw a nice little breakout. And yeah, now I wouldn't go and chase this, but I'd look for the consolidation. I'd let the moving averages catch up, see if it flags out again, right? Price action moves between expansion and contraction, wherever that expansion is going to be. We don't know, but that would be something that I'd be watching for in the price of Tesla. All right, so those are the larger market cap names. What's up, Raul? Now, I'm going to go ahead and put some of the names that everyone's asking about into a notepad, and I'm going to pull up those various names here, okay? So we got quite a bit. You got UAL, Babacita, we got Spot, Disney, Coin. I have, I can talk about Bitcoin and stuff too here. Copper. Did Microsoft. Okay, here we go. So PayPal, SoFi, TLT. I did Amazon, did Google. Okay. All right. There's some names. How do I spot reversals intraday? I use a couple of tools. One, I'll look at just price action alone. So I'll look at levels of support and or resistance. And two, I like to use market net flow. So market net flow, you can see that the divergence here started really picking up where you have the cumulative net premiums of puts versus the cumulative net premiums of calls. They started to diverge from one another. And with the red line rising above the green line, this is more of a bearish divergence. So then I'll look down at 0 date levels or gamma levels, and you can see 573 here on SPY started kind of picking up some pace, and we're basically right on 573 right now. So this acted kind of like a magnet. So yeah, we're pulling back a little bit, and the market net flow is rather bearish, which doesn't support a higher move, but that can change, right? That can change. All we would need to see is price action of the SPY pick up a little bit, maybe this to sink off, and maybe for the cumulative net premiums for calls to pick up a little bit. And that would be a little bit more bullish of a sign, but it's not there quite yet. Overall, though, it's been a choppy day in market net flow, and it's been a choppy day for the price action of SPY. The original level kind of that we marked out when I started was 574 as a level where price can repel from, and you can see price has repelled from that level, and it came into one of its magnets, and that magnet happened to be down here at 573. Let's look at strike fully, and you can see there's also, from a larger perspective of 0 date, there's some action over a 575, okay? But if you look at the change, this is where the price action is currently kind of more focused on at the moment, okay? So yeah, right now I'd be more of just kind of like on the sidelines and just let price action do its thing. All right, we'll pull up EXPE. I did go over IWM, but we can pull that one back up again. Thanks, B. All right. A lot of advancing issues today. So we have 79 versus 22 in the S&P 100. Eli Lilly's hitting us down. NVIDIA, man. NVIDIA like controls this market. The problem with having such a high correlation advanced decline line and the price action coming off, it leaves the door open for a lot of reversal to happen. So NVIDIA is going to have to just pick its face off the ground to see this market do any sort of reversal here. I say NVIDIA because NVIDIA is such a high implied volatility. But here you go. So NVIDIA is holding from its little 5-day moving average over here. Still an inside trading candle. Didn't quite come down to the 119. Oh, close. Yeah, pretty close. So if this picks up, I mean, this to me tells me that if we can actually get a bounce there in NVIDIA, I think that will probably help the SPY as long as we get some, participation maybe in something like Microsoft or something. All right, I'll pull up these individual names. I'm just trying to get a read on the market here to see if I can potentially trade. Yeah, I'm not a huge fan of today's price action. Not a huge fan, but does look intriguing. I just don't like going up against market net flow like
just
this.
off the highs of the day, up 31%. That's ticker FAAS. Foxtrot Alpha Alpha Sandy. Share seeing volume just off the highs of the day.
Yeah, it's looking like it's can set up for a nice bounce. I just don't like trading against the market net flow. So if I were to go, I'd want it to see it. I'd be bullish above 573. So I'll draw it on the screen because I'll just kind of paper trade it in a way because I'm not gonna execute my own funds into it yet. I'd rather just sit on my hands. I don't really care to go too much, but I'll be say more bullish above 573, back up to 574, and if it breaks down below 573, I'd be more of the cautionary area. Okay, let's pull up some of these individual names. Go daily time frame. We're going to go UAL first. Now, what I was talking about on various airlines, they were I started getting some of them on the tight list. The tight list was showing little consolidations, little flag patterns this week on UAL and some other random ones. But yeah, so we're seeing some strength in these airlines. Now, it could be for a number of reasons. I don't know all the narratives, but what I can tell you is sometimes, I mean, what's the biggest like overhead for transportations is typically oil, and if oil is going to be coming off, that means that the cost of doing business should obviously decrease, which could potentially benefit airliners and various transports. So yeah, UAL is seeing a pretty large move. Would I chase this? No, absolutely not. But I'd be looking for consolidations, pullbacks. Maybe if it flags out. We recently broke through this high, so perhaps if price were to try to come in at some point while the moving averages catch up, that'd be something that I'd be watching for a potential setup. There's a lot of different ones. So Boeing, right? Boeing has kind of been wedging here. Perhaps now might be the time to start looking into something like after just getting clobbered time and time again, right? And just horrible news, horrible things always happen. But just be aware that the trend, it sucks, right? So the 200-day, it's clearly declining. 50 days, clearly declining. 20 days, clearly declining. So if you're trying to do this, you'd have to look at the smaller time frames, right? So if I look at the 5-day moving average, this is kind of where I like to start executing. But I'm typically more aggressive on profit taking and so forth. But you have the 5-day moving average starting to flatten out here. You put in a higher low, and now we're pulling into an area of resistance here. So for something like Boeing, right, this looks like it could be potentially setting up, right? If we pull in a little bit and then start breaking from these levels, we can see potentially a nice little pop as we're holding this point of control here. And then maybe perhaps the 5-day moving average starts to turn up and we get a little bit of a nice move, up more north to the upside, maybe 160, $3 higher, maybe even to the 50-day, which would be, roughly around 167. I think that's more than possible. You can see that this day over here was a pretty big outside reversal day. We haven't broken through this day yet. So you can see, let me draw it out right here. So to retest this high makes sense. And then if you look at it from down this low, we've been just trading inside of that bar for some time, right? So we had an inside day and then we had this scary day and then it reversed right back up and we're trying to break above that. So we're just consolidating right now in a larger kind of wedge structure. And as we know, contraction leads to expansion. So if we are going to say, just break out of this range, you can just do a measured move of double this range. So a measured move of this range would bring us up to and around about 165, kind of what I said. Just remember, the problem with these names is you're fighting trend. So just be aware of that. You're fighting trend. There's all kinds of airlines, right? LUV, right? Southwest.
BP
Also seeing a
Kamala
lot of
Harris
volatility.
to visit the border for
Like
the
the
first time in
2-day
3
swing,
years.
but it's also
That's
coming
coming from
into
Fox News.
a level where it's, you know, prior supply and we're building the higher low into it. So we're going to break it and try to come up to fill this prior gap. J Blue. This one was on the tight list, or I think it was, right? You had this flag pattern here. Boom, we broke out. Now I'd be watching for these consolidations, okay? What else is out there? Delta, right? DAL, also another huge move. Boom, right? Be looking for the consolidations. It's basically just BA has not made the move yet. So if there is going to be a substantial move, perhaps maybe that might be the one to watch out for. But we're seeing obviously more relative strength in a lot of the other names. How do I trade around a point of control? I don't necessarily use it like to execute into, but it's more of a level of interest. So if price were to pull into it from, you know, maybe a breakout and the trend is holding up, I'd look to see if strength and if it bounces from those levels and maybe add or start the position then. But it's really just a level of interest, right? So if price is moving up to it, right? But I know that we have a declining 5-day moving average and we're moving into this upper, you know, this point of control. I feel like that would be a potential area to pull some profits if you're in it, and or I just give it time to see how price consolidates in and around that area and how it breathes. It doesn't have to always do it the same way every single time, obviously, but that's how I would look at the point of control. I don't necessarily execute at the point of control. All right, so that was UAL and a bunch of other names. BABA, same thing. So you're getting a lot of big moves from the news out of China. This is across the board, right? You have BABA, PDD, some of the larger names. You got KWEB, FXI, those ETFs, all making big moves. I think the ones that I liked was DDIY.
Benzinga market
That was under
update.
round 4. We
Dow
kind of talked about
Jones
it when it was
up
getting
about
very
1%
tight here.
on the session. S&P 500 up about 0.1% on the session. Nasdaq down about 0.2%. The Russell 2000 up about 1.5%.
This was a fake bar. It has to be adjusted. I have to edit this bar. It didn't actually
Oil,
do this.
Brent prices are down for the day. Natural gas prices are up.
Yeah, we get it. Okay.
Price of Bitcoin up about 1.7%. Ethereum up about 1.5%.
Okay. So DIY, and then one that I was in was TCOM. TCOM was part of the tight list down here. And this thing exploded to the upside. All China names did. So now, you know, I'm not chasing up into these levels on other, you know, ETFs and so forth, but I will wait for consolidations, pullbacks, and then I'll go from there to see if we get some continued strength. So right now, great moves out of various Chinese equities, but now we just need to see some sort of consolidation. If you missed the move, and if you missed it, it's really not a big deal. I mean, if it's going to be a substantial move, look at. If it's going to be actually a substantial move, there's a long way to go, you know, right? There's a huge opportunity ahead of us. So yeah, even if it goes up higher and then we consolidate, whatever it might look like, you have an opportunity for these averages to catch back up and potentially move into a larger stage markup. So yeah, definitely not worth FOMOing, but definitely worth keeping an eye on to see if this is going to be a sustainable move and see some real money get behind it. So that's my thought there on various China equities. Spotify is pretty darn bullish looking to me. I wouldn't be chasing it up here in these levels, but
Irish financial minister on Apple back taxes says approximately 8 billion euros will be received by Irish exchanger by end of 2024. Irish financial.
I'm just muting him. Okay, so Spotify, yeah, it saw a nice big break, and now we're pulling back a little bit, right? So if I look at the 5-day moving average, it's turning yellow. We're below it. That means more cautionary area. It makes sense, right? This is a very strong move. Now, what you want to see is to see a higher low. I hate that blue. You want to see a higher low established, and you want to see the 5-day moving average start to turn back up. Right? So, or it's turning up right now, but if it comes down, you'd want to see it start turn back up and maybe give yourself a higher low or something like that, and then playing the breakout if you want to see continuation. But right now, it's more of a cautionary sign on Spotify. caution area in the very short term. Otherwise, other than that, if you're in the trade, I mean, it's in a very strong bullish trend. All right, let's look at Disney. All right, so Disney's finally getting a little bit of upside. It is still below a 200-day moving average, but the longer we stay up here, the 50-day will start to flatten out to turn up. So we're seeing some positive price action, but it's an overall more of a neutral stance for trend. I will say that we did break from this potential, double bottom. So if we were to measure a move from the low to the neckline breakout of this pattern, the target would be roughly and around right in this area. And that actually is interesting because if I were to extend this to the left, notice where it got hung up here before the earnings and we had to gap through it. And then it actually acted as support. Once we broke down from it, we never tested those levels. So to see Disney come back up to and around 100, this is where we can potentially see some resistance. So if you're in Disney, I'd be saying, and if you maybe played this tightening pattern right here, right, this little pullback, the hammer candle, we broke from it. If you're playing it, I'd be saying, yeah, probably up into this area is where I'd probably reduce some and or update my stop loss at minimum so I can lock in some of the risk. But yeah, overall, I mean, it's looking like a decent turnaround right there. And then we have an established area for where we can potentially go to. As far as like the very short term, would I buy right now? No, I don't even care if it runs up to 100, but maybe perhaps if price action pulls in and consolidates, and then we start to break from it, maybe that could be a play up into and around 100 with a higher stop loss. But it's getting pretty frothy here, showing a lot of strength. All right, let's look at coin. Okay, in order to talk to coin, I think we got to bring up the sailor to shift tool, and we'll do the update there. So let me work my magic here and bring this stuff up. A second here. Okay. All right, so the sailor to shift tool is currently above the zero line. If you're looking at the rate of change for 4 weeks, I don't believe that we closed up there yet. But if we do, this would be close to the. It would be the buy signal. It would be the buy signal, and then the trigger would be if we get price action above the prior week. So we're seeing a nice little move here. We're seeing strength in the rate of change between Bitcoin and gold. It's been choppy for a while as price has been consolidating. You had, when we're in a positive trend, right? Like, so for example, down here, we activated, boom, and then it gave us another buy signal over here after the sell signal. And then over throughout here, it saved us from a pretty decent drop. Then we got a buy signal, but then it faded, went to a sell signal, it bounced up, went to a buy signal, it got faded, I believe, and then we got it would have been a stop out on this week over here for sell signal, sell trigger, and this is just a strategy that I put together. A lot of people use it differently, but right now it's working on that buy signal, buy trigger currently for crypto. And if that's the case, a lot of the times, right, if we're going to actually see a nice move in crypto, maybe it's the China news that really helps drive potentially a larger new trend in the price of crypto. What can benefit very well is various crypto equities. So it's important to note the various crypto equities that may not have seen, the greatest of price action. The last time we really talked about coin was here when it was flagging out after this breakdown. And you can see we followed through to the downside. And then all of a sudden now we're starting to see it bounce up. It started consolidating. We're still in not the greatest of trends. So I'd be looking to see how things set up and then potentially go from that point. If you're a big bull, then maybe you can look at this as larger scales. You can say, okay, it's following this trend. Maybe I'll have a stop here or a stop there, or you can go to the weekly time frames. It's just a very choppy chart, and that's just unfortunate because that's typical with crypto equities. So if I go to Mara, right? If I go to Mara, MARA, right? This is down on the day, but we broke through this little tight consolidation. So if you're in this and, we're going to get that buy signal, you can look for the dips to buy. The 200-day is actually still floating up. For the most part, it's starting to flatten out and calculate down. The 50 days down, the 20 days kind of turning sideways. But this is what you get in crypto, right? Like you get a lot of chop, a lot of sideways. But if we are going to break through on that crypto, Bitcoin bear bull flag, you can see a lot of these names really potentially pick up. If I zoom in closer here on Mara, you can see this is a potential double bottom. It would be considered double bottom if we can really crack through this neckline, which is roughly at about $19. Okay, so right here, we broke through it. That's positive, right? This little consolidation. So if you played this, I'd have a stop down here. Just understand that like from where we are to this, that's minus 13%. So if you go too heavy on position sizing in any crypto equity, and it goes against you, you're going to be biting your nails. You're going to feel the pain. So with this type of stuff, like super high beta, you can reduce position sizing and you can let the trade play out a little bit longer. You can increase position sizing if price action gets very tight, right? If it gets very tight and you play a move higher, and then you can have a tight stop with more position sizing and then update it quicker. The problem is if it doesn't break out and continue, you're going to probably get stopped out more frequently. But if it does break out and you get a nice big move in the price, you're going to really extrapolate on those gains. I'll put Palantir on the list for us, okay? So there's some crypto equities there. I know there's a bunch of others, but I don't know. Like, okay, so one that looks good right now is like Cores. And Cores, I don't even know if they do crypto mining. I think that they do, what do they do? I don't know. Somebody knows what Cores is. I think that they do like data mining, and then also they do something to do with Bitcoin too, or crypto. Whatever. The chart looks good. The chart looks way better here than it does on a lot of crypto equities, right? Why? Because, well, the 20-day sloping up, the 50-day sloping up. We broke out here after a tight consolidation. Now price action is kind of consolidating here. If we can flag out a little bit, maybe the 20-day catch up, I'd be looking for another break move and potentially a bull, measured move of a flag pattern here on something like Cores. But yeah, like look at Riot, right? So Riot looks like how do you trade this, right? You can just buy some and then maybe hold and hope that price is going to go higher. But just make sure that if that's the case, right? Maybe you're like, oh, the buy signal's on crypto or Bitcoin or whatever. I want to buy a little bit more of these equities. Okay, cool. Then do so with less capital, because a move from down here to down here is minus 20%, right? That would damage my portfolio greatly if I just did a full-size position here. Even if I'm convinced that the price is going to go higher, right? If I bought a full-size position, I don't want to feel the pain down to here, right? And minus 20% of a full-size position, right? That would suck. And the only thing that I can control is what I risk, right? What I buy, when I buy it, how much I buy it, and what I risk, right? Or when I get out. And I don't have control if the price action is going to fly up higher, up 42% up to retest this 200-day. I don't know. So all I can do is focus in on what I can control. And what I can control is what I just previously stated, okay? I'll pull up Palantir right now, actually. Then I want to check in the markets, and then I'll go over some more of the names. We got Copper, PayPal on deck, SoFi, TLT, Expedia, IWM. We can do GME. We'll put that on the list. Any other names, just go ahead and put them in the chat. I'm going to check my Twitch chat up here. Hey, what's up, Exotic? IREN. Yeah, we pull up IREN. That sounds familiar. Why does that sound familiar? Where did my notepad go? Okay. There we go. All right. Palantir. Yeah, Palantir looks pretty strong. So I don't like it up here per se. I would prefer to see a little bit more of a pullback. Let these averages catch up. But you have the 20-day rising, the 50-day rising, the 200-day rising. If you're in the trade, it's looking really good. If you've been in the trade, it's looking great. You just get a lot of shakeouts, with Palantir, a lot of fake outs and shakeouts. But if you can manage to hold through that, you're doing fine. So I would imagine that we're probably going to see that again at some point. If I look at Palantir from, pull it up at the daily time frame. Let me turn off this trend changer. And then I'm going to look at the anchor volume weighted average price from this specific day. I don't know if that was earnings or not, but we are holding that, and price action is kind of consolidating. So I'd say, okay, if this is the case, maybe if price breaks down underneath this, I'd be a little bit more cautionary. And if it turns back up, that'd be the level to watch, to play maybe a break back up to 38. So right now it is holding above it. That it looks good. It's just consolidating. And now I would just like to see maybe, a few more days of consolidation, maybe six days, 7 days, a week, maybe even 2 weeks, right? I'd be totally fine with that. Even a steeper pullback to a higher low and then reversing, I'd be looking for something like that. But as far as like a new entry goes, I don't see this setup right here. I just don't see it right now. The only way that I'd see it is if you're like adding to the position that you're already up in and you're like, I'm holding it for a long term. But for a swing trade, I don't see the execution right now. You can even see the 5-day moving average is kind of flattening out here. So, if we break below this 36.50, maybe we come down a few bucks down here to retest these lows. So we're kind of on this brink of a just cautionary area. But overall, like I said, decent trend. Somebody had mentioned copper. Now, I said monthly time frame. That's a little too crazy for me. That's very long term. Let me see what I can do. I'll go max available. All right, we'll do it. Fine. Okay, so copper monthly time frame. I'm looking at copper futures. We're seeing a pretty big month following up. And now this definitely probably has to do with the China's news. So I'm assuming the monthly time frame, because if you look way back, you're kind of in this area where we've seen prior resistance, right? And haven't really closed above it other than this month over here. And we're right back up into these areas for copper. So you're seeing like on a larger term, maybe you're thinking like cup with handle. If this is the case and we're going to break out to 7, I have a hard time thinking that inflation is going to actually come down much in the future, right? With like higher copper prices, I mean, we do a lot of economic activity based off of copper, and it's such an important economic metal. So if copper prices increase dramatically, the cost of doing business is going to increase dramatically. Why did I put this on this monthly time frame? Hold on. 1 year. So if I go to the daily time frame, it's really following this move in China. Now, the reason why I drew this line out here on a prior episode or something like that is because if I measured this, double bottom, which it was a double bottom, we broke the neckline, and a measured move takes us into and around this area. Okay, I don't know why it's up a little bit higher. I think it was because I was just mentioning with this price action too. But you can see that the measured move was tagged, right? And now we're kind of consolidating and pulling back in this area as it stands in this current moment. So overall, copper's holding up pretty nicely. Came into the 200-day moving average, which is inclining. We saw a big break, followed a lot of the China stuff. And now if copper is going to come down a little bit, which is at the lows of the day, I would imagine that, stuff like Chinese names could potentially follow. And we're seeing a little bit of sell side here off the highs, but overall it's up tremendously on the days. In something like BABA, you can look at FXI, right? Up slightly on the day, but well off the highs. Overall, it's just looking like it's consolidating here, but we'll see how that kind of pans out or plays out in the near future. So that's the look on copper. Larger time frame looks pretty good, and it's just taking a little bit of a breather today. I want to just take a look quickly into the markets, see what's going on. So this 573, right? So bullish above it, bearish, cautionary below it. Why? Well, because it was one of those magnet levels, and you can see that we've kind of broken down from that level. Now, this makes sense. Why did I, we were talking about me looking for a specific setup, but I just don't like fighting market net flow. And there you go. There's your reason why, right? It looked good, but market net flow was saying, might just sit on your hands here. I'm not really one to short, especially where we currently stand. But this would have told me, and it did tell me to just, hey, stay on your hands for right now. The S&P 500 looks like it could potentially come off a little bit. It did come off, but really it's just flat on the trading session, right? So we started here yesterday, or we finished here yesterday. Let me draw a line here. There you go. That's where we started, or we closed yesterday. So we're up on the trading session. We just came into it. Sometimes these gap fills, they can act as potential levels of support. Okay, so there you go. If we bounce from this level, watch back to 573, right? You can see 573 is still the magnet right here in the shorter time frame. So 573 would be the next level that I'd say, okay, if this is going to hold above 572.29, maybe a retest of this 573, and then kind of go from there and see what happens. Overall, though, like I said, we're still above that rising 5-day moving average. We are still in positive gamma territory. So we're just pulling back a little bit here on a Friday. And overall, on the gamma chart, where are we? Well, we're right by that gamma flip line. So if we do push down further, I mean, we're still right there at the call wall at 57.50. Okay. Let's look at a couple other names here. We got PayPal. PayPal was one that's been on the radar for a minute, and I wouldn't be entering right here. I'd be looking for consolidations, but we were talking about how we can potentially be moving into a markup stage, and I'd be looking for the breakout of these areas. It broke out. I traded it. It back tested. It saw strength after that. So I'd be just looking for consolidations at this point. So the 200 days starting to turn up, the 50 days turned up, the 20 days turned up. We're kind of extended. Whenever we pull back, I'd be looking for those pullbacks. And then, earnings is around the corner. I don't really typically like to trade into earnings, but if we're moving into a markup stage, if the market's going to start, discounting and start moving further, perhaps earnings looks pretty good for PayPal. I don't trade into PayPal's earnings or any earnings. If I do, it'd be going into the trade tab. I'd be looking at what the expected move is. And if I'm like, okay, I'm kind of bullish here, I'm going to buy a few shares. That makes sense for that risk for the earnings. I've done that. I do that every once in a while. Like, for example, I liked how NVIDIA was setting up, but it was more of just like even Adobe, right? I like how Adobe was setting up. Both failed, right? Both of those failed to go lower. And did I trade Adobe? I don't think I did Adobe, but I definitely did NVIDIA. But the thing is, it doesn't matter if I'm wrong, because the risk that I'm using is so minuscule. It doesn't affect the portfolio, but it could get, if it does go up, I catch a little bit of a move, and then I look to wait for the consolidation. But I've shared my P&L curve many times, and I traded NVIDIA earnings to the upside, and I was wrong. And if you go back to that specific day on my P&L curve, you'll notice that it didn't do anything, right? Because I didn't buy anything. So what I like to do is wait for earnings, and when the earnings comes out, if we get like a nice big move, like a big pull price action, you typically get follow through. And I want to see the consolidation or the flag after. And if that takes place, I look to play the continuation of that move. So, there's so many different examples I can give for this because I do it so frequently. I did Target, right? A long time ago. This one I used as an example. I don't even know when. I think it was right over here. And I played it to the upside. And this was after this whole consolidation. I did Target over here too. So this was earnings for Target. This consolidated, and I traded through the high of this big reversal candle right there, this large wick, and I played it up a little bit. I didn't play it up into this area. I don't have the position on anymore. I think I played it up more into here. I did Disney a while ago doing this. I can't think of any right now off the top of my head. Where was Disney's trade? I think Disney was more over here. No. Disney was over here. Yeah, so we had this big earnings, and I played after this wick candle right here, played it to the upside, played it right into these prior swing highs, just for a quick trade. There's so many different earnings plays that happen. I think Unity was one. Unity, no, that didn't have earnings, but this was one that was on the radar on this day. Affirm, FRM. Yeah, if a firm, big earnings move, consolidated, bam, we had that follow through. So these are the type of things that I look for. I don't care if I miss this move. I look for the consolidation, and I'll play the next move, right? That's just what I like to do. I believe even Tesla was on there. Yeah, I know. I'm noticing those bots in the Twitch. It's annoying. Starbucks, yeah, Starbucks. Yeah, Starbucks. Starbucks was in the trade ideas. I don't know when I posted it. I'd have to look back. I think it was at 12:16 p.m. on 9/25. Yeah, so it was on this day for a potential trade idea. But I liked this bullish move here, then the consolidation, and then we had follow through, and then we started wedging here again. And it just, to me, seemed like we were setting up to go retest this high. I didn't trade it personally, but those that did, awesome. So yeah, it just basically gapped up and went up there. So now if price comes down, I'd be looking for the consolidation and then potentially a larger play here in something like Starbucks. Keep in mind the 200-day, it still needs to recover. We did have this little golden cross with a 50-day sloping up, but the 200 is still kind of flat. So the longer we stay in these areas and the 200-day starts turning back up, it could set up for a nice move in something like Starbucks. It just needs that time. The 5-day moving average, we're currently above it, and it's starting to turn back up here too. On 925, when was that? I don't really know, but I drew out the line here on the 15-day where we started flagging right here, so this is where it's kind of starting to turn back up here too. So yeah, it looks good. Starbucks looks good. I'd be waiting for some consolidations. I would like to see a pullback. I don't know if that's going to happen, and some strength after there. Thanks for the confirmation bias on the Palantir puts. I'm not really bearish on Palantir, but I'm not bullish right now at the same time. It's definitely bullish. The trend is bullish, but I think it's due for consolidation. That's it. I personally, I don't short really, but I don't really short. I like to, every once in a while I'll fade something, but I'm not much of a short seller. But yeah, so for example, even if this were to come down here, cool, awesome, good trade, but I'd still be quickly looking for a dip buy after consolidation. Yeah. Thoughts on seasonality for SPY in October? Yeah, we'll pull that up. Let me go here really quick. There was PayPal. I want to go over a couple more names. Here comes the SPY. It's coming into that 5750. I want to see how these other larger market cap names are doing. Apple's flat on the day. Microsoft's breaking down through this that level that we were talking about earlier. Nvidia coming in to potentially backtest that breakout. Google's still up on the day. Amazon's 192 minus about 2%. Meta rather flat, and then Tesla's still holding strong over here. Market net flow. The green line is starting to pick back up here, which is actually a decent sign. So as this is picking back up, if this starts to flatten out or turn back down, I'd be looking at this 5750 for potentially a break to bounce from these levels. And that's what we've been seeing, is just back and forth between 5750. You'd have to go watch my last market brief where we talked about just be careful if it starts breaking out, because it's a high probability that we pull back in if traders aren't reaching up further. It's kind of what we're seeing right now, and that's what we saw the prior day. Doesn't necessarily mean it's bearish. We just need to see some price action, some traders start to reach out further. It's just not happening right now. Okay. Which one would I just do? Oh yeah, I was going to SoFi. So SoFi, so this is nice. So the 200 days starting to flatten out here. The 20 days picking up, the 50 days sloping up. They're starting to converge quite a bit. And, SoFi, we saw some strength here, and we've seen a pullback, and we're seeing some follow through strength. So it's setting up. I think it still requires a lot more time. If I go into the weekly time frame, I think the last time we talked about it here was this larger, trend in this structure. But the longer that we trade in and around these areas or break out, potentially come back and test, the 30-week can start turning up. The 40-week can start turning up. The 10-week, right? That's the 40-week is the 200-day moving average, right? And that's what we use to determine larger market structure in cycles, where you have accumulation, markup, distribution, decline. And if it starts to turn up after this period, it could be, accumulation stage moving into a markup. So I think we got to be open to that possibility. Is it there yet? No, it's not there yet. Doesn't mean you can't catch a move, but even if you catch a move, it's still going to have to turn. The trend is going to have to start calculating upwards. Right? So if I can show you. So if I go into trend changer. Wait, there we go. Trend changer. I'm going to go ahead and go settings. I'm going to make this the 200. This will help you visualize the calculation. So do you see how it's yellow right here? So this is the 200-day moving average. It was green for a little bit, and now it's yellow. So it's telling us right now that, hey, caution right here, because it could very well start to turn green and start to calculate up. But right now it's diverging, meaning the calculation is going down while price action is above it. So if this starts turning green, right, that would be a positive sign. And then you'd want to start to see it turn back up. That's just a visual. It's not a signal by any means. It's just more of just a visual to help us understand, the direction of the moving average. Yeah, we can look at DIA. I'll put that on the list. TLT, I do have a position in TLT, which I got to check on. I did take a little bit off today. DIA, I'll take a look at. So I'll pull up TLT because I'm in a position. Doing good. Cool. Yay. Okay, so yesterday I had a signal that just told me like, yeah, you should be buying bonds here. So from a technical standpoint, just looking at the chart of TLT, I'll go deeper into it, but TLT has been coming off, right? Why has TLT been coming off? Well, bond yields have been rising. Okay. Where did it come into? Well, it came into the 50-day moving average, and that's inclining, right? That's moving up, the 200 days moving up. So this is a pullback within a trend that's starting to change to be more positive, right? If we go to the weekly time frame, you'll see that there's compression pattern. They started turning up more here. Boom, we broke out. Now we're back testing that area. Is it going to hold? I don't know. Okay, but I definitely took a position. Now, why did I really want to execute into yesterday for the price action? So yesterday, at about roughly at around 7 in the morning, a little bit later, what I noticed early on was that crude oil took a substantial hit. And this was off of some news, understandably, but I don't really care. I'm looking at the price of oil. Now, why is that important? Let me pull up this chart. This was from yesterday. I didn't update it. The reason why I thought this was important is because if I look at this chart, this is looking at the 10-year yield, that's the candlesticks, and oil, I use USO, is the black line. So this was yesterday. The 10-year yield was rising. Oil was coming off. Now, if you look at this chart, oil typically leads the price movement in the 10-year yield. So you can see we peaked over here. It started going down. Shortly thereafter, yields followed. It started rising over here. Shortly thereafter, boom, yields followed. Even here, when oil started really breaking down, yields was going up. Okay, and that to me was also another time, I believe, actually I have the date. August 30th, exact date was right here. Boom, August 30th. I put in a trade idea for TLT2. Why? Because oil was coming down, 10-year yield is rising. If this is going to stick to this correlation that oil is going to front run the 10-year yield, that to me told me that, hey, they're diverging right now, and that might be an opportunity to get into bonds, because if the yields do follow suit and fall, that could be an area. So now, yesterday, 10-year yield was up, right? It was rising up, and oil was coming off pretty hard, pretty significantly. So my thought simply was, okay, if this is going to be the case, perhaps now is the time to buy bonds. So let's look at bonds. What were bonds doing? And by the way, oil is up on the day today, okay, which is another reason why I took partial profits. It was pulling into the 50-day moving average or around it. It was more roughly around this area. And I was looking for strength. And my thought was, yeah, I'm going to execute into this and look for a potential bounce in TLT. So yeah, right now it's in an uptrend. It's bouncing a little bit here. Oil's up on the day. So maybe this takes a little bit more to consolidate. But I took some profits today, and now I'll have my stop down here or potentially update it to the low of today's trading day. Depends on where price action kind of closes for the trading session. And I'll go from there. But I did lock in some profits on TLT. Cool. We do got DIA, EXPE on deck. I'll pull up Iran, GME, and so forth, and I'll go back into the chat. I want to take a quick look here at the markets. Just floating around still, chopping people up to smithereens. We did come back up into that. Oh, no, we didn't come back to the 5. It was 570. What was 572.20? Oh, that was the close right here. We did not come back up to the 573. Let's see if anything changed there. No, actually, they're reaching down further to 570. but you still see the cumulative net premiums start to climb up here, and this is starting to wane. So if we do get some sort of a flush down lower, that's pretty deep. That's pretty steep. But I will say that's still within the daily expected move. So I wouldn't rule anything out here, people. I wouldn't rule anything out as it currently stands. Let me draw this out for you. This could be a level of interest to watch. What I'll do here is I'm just going to set an alert. Okay, so I just set an alert here. So the reason why I just put that there is it probably goes back even further, actually, to be honest. But I'll just doing it from the shorter time frame. Kind of does, yeah. Okay. If price action were to come down into these areas, this is kind of in confluence with the week-to-date anchored volume weighted average price. So if we're going to start to see a sell-off here, maybe that could be a level where we bounce from, potentially head lower or correct back up higher. I don't know if it's going to reach there. I'm not interested in trading this right now, but perhaps if we start hitting some of these levels, maybe I'd be interested in seeing what the price action is doing. Tesla's daily expected move, I guess it does have a Friday expiration, but you got to understand they do weeklies, right? So today, I mean, right now, I don't know what it was at the start of business or at the end of business yesterday, but right now it's still at 3.12 plus or minus from where we currently stand. I look at the weekly expected moves on these names, but for like the index products, I'll use the daily because they trade daily expirations, and they're adding more daily expirations around different products. But SPX is the mother one, like that's the big product. Then you can do SPY that has dailies. You have IWM, which now does dailies. That's pretty darn new. That they used to do Monday, Wednesday, Friday. Now they do daily. I know TLT will eventually get there. They're Monday, Wednesday, Friday from what if I remember correctly. Let me check. Yeah. Three expirations, but I think that they're on the list to get dailies, which takes a while to get to that point. Then you got Qs, right? Qs do daily. What am I missing? I don't know what I'm missing, but those are the main ones that I watch. I guess futures too. So I do SPX, SPY, Q, IWM, ES, NQ, and Ready. Okay. Any theories on the dollar movement? We'll pull up the dollar. That's a good one too. I'm gonna take a quick break. I need some more water. This little tiny bottle is gonna be running out. Took a look at net flow on Palantir. What time frame did you look at net flow on Palantir? But that's a smart move. Nobody, yeah, that's smart to look at that stuff. So props to you to look at that stuff. That's good. Yeah, you can diversify bonds for sure. I mean, if you want different bonds, Nick, LQD is a investment grade. That's a good one. LQD. Look at that. I mean, we're flagging here. Boom, boom, boom. We're starting to move higher in there in LQD. There you go. I did post another one. What was the name of it? I forget the name of it. I think it was IGLB. Yeah, IGLB. Look at this. So I talked about this one, I think, on... Shit, I don't know when I talked about this. When did I post this? I think August 30th was originally... Yeah, August 30th was one time that I talked about. It was over here. It flagged. It broke the pivot, and now we're back testing right here. So and look at this trend. I mean, this thing is nice. Look at it, IGLB, man. The thing is, like, just know that like these aren't like the highest of betas, right? But they're definitely. I mean, you want to be with the trend on some of these names, but coming back to the swing high is 1.29%, and obviously, there's other benefits to owning bonds and stuff like that too. But yeah, so there you go, LQD, IGLB, maybe IEF, right? What's IEF look like? Also, another consolidation, a little flag breakout. So it doesn't need to just be TLT, right? But yeah, there's some products there for you, right? There's tons of products. There's all kinds of products. You can go to Jim Bianco's fund, right? If any of you know Jim Bianco, right? He has dang, I forget the name of it. My bad. But he has a fund where he actively manages a portfolio and that stuff. You can do whatever you want, right? Do whatever you want. I look at it as just inventory, right? If it's setting up, if I like the trade, I'll take it. Okay. All right, we'll come back to the dollar. I'm gonna take a quick little nap. Just kidding. I'm gonna put on my I'm gonna unmute this dude. I'm gonna put on a little bit of tunes. I'm gonna take a quick break. Refresh my water. Go say hi to my boy. All right, what should I leave on the screen? I think I'll update. I'll just put on market net flow for right now. I'll keep this up. I'm gonna be back super quick, but how's everyone doing so far? By the way, yeah, you could do leverage products for TLT, TMF. Yeah, just know what you're trading there, right? Like, I'm always like very specific when you're trading a leverage product. Understand still position sizing, risk management, all that good stuff. Excuse me, burped. I gotta check my portfolio, dude. I'm gonna take a break here in a moment. Just a mental break right now. Nobody mentioned this little sneaker, dude. MTCH. I'll pull that one up too. I guess I can pull up some of the names that I'm watching. Coca-Cola. KO. Pan W. PANW. Another name that's potentially setting up here. Medtronic. MDT. I swear I'm gonna go take a break here in a moment. Somebody said, you'd be crazy to short miners here. I hella shorted miners just because of that. So I can retweet it. I should get out of the position now. Actually, I'm gonna check it right now. Maybe we'll just exit some of it. I'm still holding up strong. I mean, there's really no reason to, but I can exit a little bit. I'm gonna do that actually.
U.S. Treasury Department said Iranian state-sponsored actors undertook malicious cyber.
I'm gonna exit half because I'm not much of a shorter, but I did fade it.
Process.
Somebody was like, it'd be crazy to short miners here. And the moment I looked at the chart, I'm like, I'm just gonna do it just because of that. Prominent person, dude. In the space of trading, it was pretty funny.
FCX, Freeport McMoran, Stephanie Link on CNBC said she's
I locked in half.
Or bought more Freeport McMoran, Foxtrot Charlie X-Ray.
Let me check in on Microsoft. I have a position in Microsoft. Yeah, I don't care about Microsoft. I'm just keeping that still going.
Jason Snipe on CNBC sold
Don't
the
bug me.
XLE Energy ETF.
Okay.
X-Ray Lima Echo.
How we doing? New highs. Let's go. Look at that P&L curve. Gangster. Beauty. Manage risk. You're in love with KO, KO? KO! All right, I'll be right back. Sorry, I'm wasting time here. Got a few more names so we can go over. Somebody's asking me for the dollar amount that I traded. I don't see how that would benefit anybody, the dollar amount. But it was north of $30,000. All right, I'll be back. And it's not there anymore. By the way, you have no idea what the position sizing of that is. Dollar amount makes no sense. All right, I'll be right back. Oh, baby, baby, we're back. Legend has it. He's back. Okay. The hell's going on with miners today? I don't know. Let's take a look actually at silver. Silver and miners follow very closely. So I will tell you this. I'm glad that I got out of some of that intraday here. But silver is down significantly on the day. So not significantly. Down 1.27%. Let me turn off this music. Okay. Is it the best time per seasonality? I didn't even look at seasonality. Maybe it is. Okay, so silver. All right, silver. Yesterday, it looked really bullish, but it started reversing on the trading session, right? So, and it created this shooting star type candle in silver futures, right? We're following through on that a little bit today. My baby's all crying now. Right now, we're starting to see a little bit of a bounce. So the reason why I'm bringing up silver and the miners is because silver and miners track pretty darn closely. So if I actually pull up me see here. Yes, yes, yes. Yes, yes, yes.
Volkswagen updates its forecast for
Give me
2024.
a second here.
Expects deliveries to customers to be around 9 million vehicles. Expects group sales revenue of around 320 billion euros. Sees 2024 operating profit around 18 billion euros. Sees 2024 operating return on sales of around 5.6%. That from Volkswagen.
You don't say. You do say. All right. Silver. Yeah. Okay, so this chart is showing the price of silver above us and the price of the miners below us. Okay. And what you'll notice here is they go hand in hand, especially if you look at a 20-day correlation. What do you notice? It stays almost for like a perfect correlation. So what I like to do here is that if I notice that silver's having a day that's down, but yet miners are, dramatically up, or maybe miners are putting in a higher high and silver's
Volkswagen
not.
said deterioration in macroeconomic environment is having a negative impact.
I look to potentially fade those trades. And or just a strong move. So the reason why I bring this up is because you pull up silver and silver's coming off a little bit, right? So this came off roughly at about 6:30, in the morning. GDX, right about here, 6:30. They're just trading hand in hand right now as far as the perfect correlation goes. So if silver starts to bounce here, which it looked like it was, if silver does bounce here and doesn't start heading down to this point of control, yeah, GDX miners will probably follow. So just a tight correlation between there. And miners they're higher beta, right? So if the market comes down, hard and fast, miners can track because of just sometimes that's just what happens when things correlate. So yeah, miners are down 2.26%. I traded DUST, dust. That means it's the inverse of miners. That's up 4.7% on the day. Price was coming in, and now we're seeing a little bit of a bounce, and I've already exited half the position, right? And then I'll probably just lock in right here, and I'll put a stop underneath the low of trading session. Miners are bullish. Miners are bullish right now, right? Miners are bullish. It's a pullback after a very strong move. This kind of stuff happens, right? So instead of trying to be super tactical and short, which sometimes I do. Sometimes I fade strong moves, but understand that on a 3X account or 3X fund, I'm doing that because I can use less capital. So it's a small position, right? So you're like, oh man, you made 5% today. Yeah, but it's sometimes a 1% move in something like bonds can make, it's just as much as, a 1% move, in my direction of bonds might be the same as a, 4% position move in something like miners or whatever, if that makes sense. All right. Yo, what's up, Nova? Yeah, we'll look at DIA. We're going to do that now. Any suggestions on Lily? Should I sell? Will they drop a lot more? Depends on when you bought it. I don't really have any suggestions or recommendations. I can't do that. But, Lily... Okay, yeah, so, it doesn't look wonderful right here as it broke down from here. But the overall... I don't know when you entered it or how long you plan on having it for. If it's an investment, if it's a shorter time frame. But this happens in these names, these structures. Not a huge fan of this breakdown right here, but if I look at it like this, we're coming down into this lower thing. So if we start reclaiming the 50-day, it could easily turn right back up. We're above a rising 200-day, so the longer term's good. There's reasons to be concerned when it breaks this like that. Boom, watch out. But you can, and if you get out, okay, cool. And then you could always look to re-enter or maybe take partial positions and have your stop down lower and you're trying to hold it for longer. It just depends on your time frame. For me, I'm more of a swing trader. I'm shorter term. So am I going to be looking to buy down here? I would prefer to recoup. I'd prefer this to start turning back around and so forth.
Of Hezbollah's Nasrallah.
But yeah, it just kind of comes down to more preference. And, you could have entered way down here for all I know. Back to this breakout, and you'd be still up in the position. Plenty. But if you entered right here and it's down there, yeah, then you should have got out probably on this breakdown. And then if you entered, here, then this would have been the stop here for that trading session, right? So then, yeah, that's what I'd be looking at on the daily time frame. But yeah, I mean, this thing has went super, super high, super fast, and we're pulling back a little bit. Makes sense. Make a sense to me. All right, let's look at DIA. Of the Dow Jones Industrial Average, the diamonds. New highs. It's not necessarily bearish. That is bullish. Would I be chasing up here? Nope, just be waiting for those consolidations per usual. Above a rising 5-day moving average, we're in positive gamma territory. Look for pullbacks, look for consolidations. We recently broke out of this little level right over here. So I'd be looking to see if price comes back in here, maybe recoups, puts in a higher low, and then go from there to retest these highs. If you're looking for longer term, I would prefer, you know, more of a consolidation than anything before entering for more of a longer swing trade. But if you're a little bit more aggressive in the smaller time frames, I'd be doing exactly what I just said there. But yeah, overall, I mean, it's bullish, man. Everything's bullish. 20 days up, 50 days up, 200 days up. So look for pullbacks into these averages and then strength to come after. We can probably throw on some anchor volume weighted average prices too. So if you want to get more technical, we'll go to here. We'll go DIA. Bam. So if DIA starts to pull back from these levels, I'd be watching this anchor volume weighted average price here too, which is roughly at about 418-ish. You know, I'm just anchoring from this prior swing low where it started to see some strength, right? So even if it comes all the way down here, people might get all scared, but if it turns right back up and holds, kind of like what IWM did recently, right? I don't know where it's at now, but IWM, it kind of flushed out and found some strength here, went up a little bit higher, and still just kind of doodling itself around. Okay. The bullish percent index for the DIA. Yeah, I could pull it up. It's a lot more choppier, those ones. But we'll pull it up. I still look at it. That's for show. No. Yeah, so let me download this. So he has a good point in saying the bullish percent chart for Dow Jones. There you go. Okay, so here's the bullish percent chart for the Dow Jones. I think I don't know when we talked about this one last, if we even did. I think it was it was right here. I think just in September, I think we talked about a bunch of different bullish percent charts, but you can see this is cranking up higher. It's actually at a high point that we haven't seen for quite, like, these are high levels, but you also have the RSI that is diverging currently too. So this is pressing higher, this is diverging. I think that's worth noting as far as like, hey, this could probably consolidate here in the very near future. And I mean, just look at price action. It came so far and so fast. So if it were to consolidate, that's what I'd be looking for, and then strength after that point. I just don't like entering a new position, you know, up this high. But if you're in it, it's fine, right? If you're in it, I mean, it's up at new highs, right? And it's consolidating. But if you're newly entered, then yeah, then manage risk a little bit more tighter. But it just depends on kind of your time frame and when you entered. Okay. The dollar was one that we wanted to talk about. Dollar's seen a lot of volatility, and when it sees a lot of volatility, you can potentially see a break and a direction in trend change, or like a directional move in the near future. So you can see, like, we're seeing some large swings back and forth in the dollar, and it's sitting roughly, I mean, at year-to-date lows. Where today we hit a new low for the year-to-date, and you know, these things, the correlation that this has with a lot of assets, including the S&P 500, it's typically like negative, right? So if this falls, we've seen the S&P 500 rise, we've seen gold rise. So for any reason, if the dollar wants to start breaking and catching a little bit of relief and moving up, that's what could put pressure back on these markets, including things like potentially gold. I don't know the seasonality of the dollar. I haven't looked at that for a minute, but it could be worth looking at. And if you look right here, on the very short term, right? Well, what do you notice here intraday? So this is intraday minute time frame. Oh, we saw a big fall and then a rise. What was SPY doing? Let's take a look at SPY. Oh, you saw a nice rise and then it fell, right? The exact opposite. All right. As far as gamma levels go right now, we're right there at 57.50. It's too hard to break from it when traders aren't really reaching anywhere. As far as daily expected move, we're flat on the trading session to slightly down. See if anything changed from a 0 day. We have still traders reaching out to 572, which we're basically at right now. A little bit lower. Market net flow, the cumulative net premiums for calls have been increasing. This has been decreasing. That's good to see if you want to be more bullish and look for a bounce. But it's still not quite there yet. But that's a positive sign that the market could potentially stabilize this fall. The problem here is it's still bearish, right? Still bearish. So you got to be patient and kind of just wait things out if you're trying to trade this. Personally, I am not. Hey, thanks, Nick. Mom's asking, is SPY going down only from here or up in coming weeks before a crash? I don't know. I don't think anyone knows that answer. I think you just got to be prepared for the best and or prepare for the worst, hope for the best, right? I mean, unless if you want the worst to happen. But for me, like I said, I don't really short too much, so I'll add exposure, I'll reduce exposure, and I look at market conditions, right? If we're above a rising 5-day moving average, if we're in positive gamma territory, I'm looking to add exposure to the markets. It's as simple as that. And as soon as that changes, like I don't know if the market's going to crash or if the market's going to fall 10% or whatever, but I will tell you that I will have my market conditions on the shorter time frame notify me ahead of time, right? I'll know if we start getting below the 5-day moving average and starting to flatten out, hey, be a little cautious here, Mike. Or if we start breaking through this gamma flip line and both, and all of a sudden we go into negative gamma, I'd be like, okay, time to let off the gas here, manage what you have on, and make sure you're updating them stops. That's why my P&L curve is just like this. And sometimes I go through flat zones. My goal here is to keep the position sizing main focus, looking at high beta to low beta, adjusting via those parameters. And then when we're in positive gamma above a rising 5-day moving average, I'm looking to add exposure. So I want to catch the moves up and I want to reduce the portfolio exposure for times that are potentially moving into, some stormier clouds or stormier weather or more volatility. That's what's working for me right now. I've noticed that in negative gamma territory, we get a lot more shakeouts, fakeouts, or false breakouts and stuff like that. Even if there's a lot of good setups in those negative conditions, I'll take some, but the position sizing on those positions in bad conditions, I'm reducing. So the reason for that is because if the stock itself looks good, if everything's setting up and it looks good, I'm okay to take it. But if the market conditions are telling me something else, it's telling me that there's a high probability that I'm going to get faked out, shaked out. So what do I do? What do I have control of? I only can control the size of my position. So I'll probably enter into less names or the ones that I really like. And then on top of that, it'll probably just be more starter positions, like 2% here, 2% there. And that's it. And that's what I'll do. But I probably won't be going full-size positions in anything in bad market conditions. I'll just wait. I'd rather have, and I'm not trying to catch a move to the downside. Like I do not care about that. I do not care because you open yourself up to more risk by trying to catch moves up and catch moves down. So And the problem with, and the thing is with shorting, you can make money and you can make money fast shorting. Don't get me wrong. But the moves happen faster, they're more aggressive, and you have to be prepared ahead of time. And a lot of the times they'll happen like overnight, and then all of a sudden it's down 15% right when you wake up, and you're like, what happened? Do I short it now? And if you do, you can get your face blown right back out of the water because the move rips right back in your face. Whereas if you're in positive gamma and above a rising 5-day moving average, volatility typically reduces, right? Doesn't mean that's going to be the case with all stocks, but typically volatility reduces. And then you pay attention to some main strikes and main gamma levels, and you just play and you trade. Like, for example, I'm looking to add more exposure into names that are working, but I'm also well aware that there's a lot of stocks that are correlated strongly to the S&P 500. And the S&P 500 structure of gamma right now, there's a gigantic pin right here at 5750. So once this pin gets pulled from the grenade, we're either going to just blow from it to the upside or blow from the downside, or whatever it's called. Okay. So the exposure that I added to yesterday was, what did I add to yesterday? Was bonds, based off of just the quick analysis that I did. And then I did some short miners too, but that was like just a super random thing. That was more of just kind of a random thing. A little fade. That wasn't yesterday. That was the day. No, that was yesterday. It was yesterday. Okay. Yeah, so there was the dollar. We went over in a tangent there. No, we're not in negative gamma territory. We're in positive gamma territory. We're just pinned at a gamma level right here. The gamma flip line down here is at a 5666 or 5668 or something like that. CEG and LRCX. I'll put those on the list. LRCX. I'm going to go through some of these names really quick, and then I'll move through that list. EXPE, Expedia. Yeah, it looks good. Expedia's breaking from this area, but I wouldn't chase it up here. I don't like chasing, especially after a move down here. You got to ask yourself, where did price come from? Right? I'd be looking for the consolidations, right? Maybe a back test of this breakout area. And if that's the case, I'd look for strength right after for these to turn up. But yeah, a lot of these leisure things have been actually showing some strength. So I'd be keeping an eye on stuff like that. Even some regional banks have been looking actually pretty decent too. Let me see the KRE. It's kind of all choppy, but some of the random regional banks, they might have been not in the KRE though. That looking pretty decent. I'll have to pull this up some other time. So there's EXPE. GME saw some strength earlier today. Look at, I don't know. It's like you either catch the move or you don't. News hits and then all of a sudden it rips, right? But we're above a rising 5-day moving average. We actually kind of broke out here, and price is flagging right now. All right. So if you're trying to trade this, you'd have probably a stop under here, a stop under here, and you'd probably look for strength backing up through 2260, 2270, maybe around there. Right? If you're looking for shorter term trade, right? Do you see what I'm saying? Or above a rising 5-day moving average. We saw some strength right here break, and then now we're just consolidating and pulling back. So what I'd want to see is strength from that level, which we kind of saw here-ish, kind of, but we're really just trading within this candle. So I'd be looking for maybe a break. I'm not going to trade it personally, but a break from here, and then maybe we get a continuation, boom, up further. Daily time frame, price action is getting pretty tight here. 50 days sloping down, 200 sloping up, 20 days trying to slope up. So yeah, it's getting tight. We'll probably see an expansionary move here in the near future. So I'd just be on the right side of the move. And right now it would be above a rising 5-day. But if we get below that, then I'd be obviously much more cautious. Somebody had mentioned IREN earlier. What is IREN? Iris Energy. Be looking at just this level right here. It looks like it's kind of getting hung up, kind of this zone right here. Remove this. This was really nice right over here. You had these kind of contraction pattern right here. How price got really tight and then we broke from that. That was clean. That led to a huge move. So that's why I like looking for the contractions, right? I like looking for price action to contract. Right now, it's not really contracting. It's quite volatile. It kind of contracted here, not really. Now, if I'm looking at this from a terms of a double bottom, if we start closing above this line, I would prefer it to actually kind of pull in a little bit more and for the 50-day to start flattening out and the 20-day to start turning up like that, right? And if that's the case, if we start breaking through this, 930, I mean, a measured move of this move, for Iran, for just a double bottom, could bring us up to 1250.
Hezbollah's Al-Manar TV says at least one
Alright.
killed
I
and
would just
50
prefer to see a
wounded
little more
in additional
consolidation.
strikes on Beirut's southern suburbs.
Okay, let me see here. Thoughts on NVIDIA? I did Mara, I did VU. I did not do VU, but VU is, pretty much in perfect correlation with the S&P 500. That's it. We talked about the SPY pretty much on my market briefs, but that's all. That's pretty much what VU is. So we broke out. We're a day separated from all-time highs. If we pull back in, that would just be another higher low if this holds. It's fine right now, but I would be looking for some sort of consolidation or pullback in the near future for the S&P 500. Mara, we did talk about earlier on the stream. And we talked about the Sailor to Shift tool, so I just go back to it when we talked about it. But we did break out of this little consolidation. The trends are kind of all over the place. So if you're looking for a double bottom, maybe perhaps if we come up here and consolidate and then break from this. But it's overall just a very sloppy. It's very hard to get risk right in these names. And basically, in short, what I did was I just said, make sure your position sizing makes sense for the beta of this product. CRRZ was one that we talked about that I was like, this one looks decent, how it consolidated and broke out. And now we're, potentially flagging, consolidating here for another potential move. And I think that's in the crypto space or data space, or data mining or something like that. Okay. MTCH was one on my radar. I have a little position here. But the reason why is because if I zoom out to the weekly time frame, you can see it went through clearly a stage 4 decline. And my question now is this an accumulation phase and potentially moving into a stage 2 markup, right? We move between 4 stages, accumulation, markup, distribution, and then decline. And if I zoom in here, you can see the 200-day starting to turn up, the 50-day starting to turn up here, the 20-day, right? So, and then we have this compression pattern. So my thought is, if we can hold this low or this low, I want to be a buyer and look for ways to buy in something like Match Group. And if that's the case, maybe we do catch a bigger move. If we don't, my risk is somewhat small, and I'd be looking to just trade around the position up until I'm told otherwise. But Match looks pretty decent. Coca-Cola. I like the look of Coca-Cola. It started breaking out today. It came in a little bit, but overall, we did a bigger base breakout on the weekly time frame. Boom, boom, right? Big breakout here, and now is kind of just looking for the consolidation. And right now, it's consolidating within this flag pattern with a little bit of a fake out today on today's price action, but still the low over here is holding. So I'd be probably down here would be my stop. Maybe a little bit lower because it's a little bit lower of a beta name. So if I go down here, it's only 2%. And my position sizing is like, it can manage up to a 6% drop, right? For a full size position. And that's way down here. So maybe it might be more north of a close below the 50-day or maybe 2 closes below the 50-day. And then I'd go from there. But it's a lower beta stock. And then I said PANW. This one was kind of setting up here. I'm watching this one. The 200 still sloping. The 50 days flat. 20 days coming in. So I'm looking for strength through this level. But I'll go into the 5-day and then also look to see if there's
for newly diagnosed multiple myeloma patients for whom a transplant is not planned.
So I'm looking
medium follow-up of 58.7 months. Primary endpoint was met. That's J&J.
I'm looking for a break of this kind of a pattern right here. So I don't know if it's going to, what it's going to look like, but I'd be looking to see if it does kind of reclaim this pattern here after this strong move and consolidation. Met? I don't know if I typed that in right. I don't think that somebody wanted to see this, but there are insurance names that do look good. I don't know if MetLife, I think MetLife is insurance, but yeah, strong as heck. A lot of insurance names are. Leg lunch. Yeah, dude, this auto typing, autocorrect stuff, man. Hey, thanks, Pharma. Would be good to add more to IWM. I don't really know your sizing and how you're approaching it and for the length of time. So I can only talk from the terms of me specifically and not like, your specific positions and how you manage it. From my perspective on IWM, it's a choppy name. So right now it's in an uptrend, right? The 20 is above the 50, above the 200. They're all sloping up. You are seeing higher lows, right? So that's positive. And we did get a higher high right here, but you can clearly see that we're kind of running into this 225 area of resistance, of supply. And as price pulled into here, which happens to be an anchor volume weighted average price. So IWM, boom. You can see price came in, kind of shaking out, then retested this IWM and seen some strength here. So I like it here. I don't know if I'd necessarily add in this current moment or not. I sold into some of it today and have a little bit on. That's just because it's just so choppy. It's so choppy. So minimum, I'd have my stop down here. And then if I look at the 15-minute time frame, you can see, this is not horrible, right? So it's not horrible. The calculation is, so it's yellow. What does yellow mean? Yellow means at this current moment, the 5-day moving average is actually calculating to the downside. So it's telling us to be cautious here. All right. But if we can hold price here, it's going to start to turn itself flat, to turn it back up. And then I'd be looking for the strength from that back through this high, today's high. So if you're adding, I'd prefer to add like to strength, right? And strength right now, it's not really there yet, or you'd be adding it to weakness. It depends on how you define strength, but maybe if it breaks above this high, closes above it on a 15-minute time frame, or this starts turning back up, maybe that's the case. Or if you add in a position and you're like, but if the low of today's hit, I'm just going to get out of that specific additional add, right? Those are just some ways that I would think about it. Or if you're like, I'm going to add here, but then if I'm going to also get out of the position or get out of that partial add if I'm stopped at this low or maybe the day low. So you just got to construct it in a way that makes sense for you. Yeah, Roberto and Pharma, we went over quite a bit of China equities. If you zoom back into the thing, but I'll talk really quickly about them. I went over copper too, which is a big component of China, China's economy. But yeah, all this looks very strong. But I wouldn't be a chaser up here. I'd just be looking for consolidations and pay close attention to it. I wouldn't get too FOMO'd into it. To see if it's a legitimate move, which it does seem like it could be legitimate. I know Goldman Sachs says that they don't see it being legitimate until they see real buyers. We'll see if that's going to be the case. But if I look into something like K-Web, like I'm not going to chase up here. I'd be looking for consolidations, right? But if I zoom out and I look at the weekly time frame, like what am I worried about, dude? If K-Web is really going to start seeing a big move and start really cranking up, just going back to the 2021 high would be, 200% gain. Pretty nice, right? Pretty nice. So yeah, I'd be looking for the consolidations. If you want to have some exposure, you can always, buy a little bit, but just be okay with it pulling back, and then looking to add into it, right? So this would probably scare people if they do too big of a position up here and it drops 50% from the recent run up to 30, to $30, which would be a 12% drop. Maybe that scares and shakes some people out, and maybe it takes the time to, set back up. But that's just Chinese equities for you. They're crazy. They move all over the place. JD's the same thing, right? Same thing goes with JD. Big move, boom, boom. Be watching for them consolidations. Market net flow right now. So what we're seeing here, so what we previously said about market net flow is the good sign was price of the cumulative net premiums of puts were going up, or calls were going up. The puts were coming down a little bit. Now it's still technically bearish, but look at how the convergence here, or even momentum, is starting to wane and potentially turn gray. Gray will give us the possibility of counter trend moves. And now if I look down to 0 date, You see that level, that 573, it's coming back into play. We drew that out a little bit later, a little bit a while ago. So 573, it's not a magnet, but it can repel price. So if we get up to this level, which we kind of actually did here on this candle, if we get up to this level, it can reject price, okay? That could be that kind of a where we repel price. It would magnetize it if we can get, if this thing lights up red. Now let me look at by strike here, how that looks. From a larger time frame, 573 could be the magnet, okay? But yeah, right now, that's in focus. So keep an eye on 573, which is about $1 higher. Let's see what it looks like on a little bit shorter time frame here. Let me look at SPY. Let me look at the minute time frame. Yeah, look at this slop. Nice little breakout, and then shoop, sucks you right back in. Then let me go to the gamma levels, which will help clear us up a little bit. Yeah. That'd be nice to see actually 5750. If it actually came down under and right around 5750 and this started turning bullish, that would actually pique my interest. Not quite there yet though. So far, what has the S&P 500 done today? Absolutely nothing. We started with a little bit of a move up and now we're back to break even, right? So if you're looking at this from a longer time frame, we haven't even tagged a daily move, and we haven't even tagged the weekly expected move this week, which is pretty rare. We usually tag it. We have not. So yeah, market net flow. It's starting to turn a little. It's starting to look better, but just give it we'll keep an eye on it and see if it gets better. If 5750 is tagged to go under it and this turns bullish, I'd be interested in that for maybe a little day trade. I don't know if I'm going to be on at that time though. Can we create check QQQ flow? Can we, check QQQ flow. I don't like to look at SPY and or Q's market net flow because it's always pretty much incorrect. It doesn't help. That's why I look at the market net flow, the total flow of the market. This incorporates individual stocks. It's a much better gauge on the overall market versus looking at the separates because it removes like the hedging activity that happens, and that could be a whirlwind of flow. Now I like to look at it for individual stocks and then also the market net flow. If I'm trading SPYs or Qs, it's the same thing. I'm looking at market net flow. But yeah, I mean, if I were to show you that, let me go into I don't even know how to do that. Let me I think I'd go into options and I go into QQQ here, pull it up, and then it's right here. So here's Q net flow. See how it's a lot more choppier. You get more spikes and stuff, but overall, I mean, it's still showing bearish here too. And then the same thing would be with the SPY. Go to SPY, go look at net flow there for SPY. If it loads. Oh, we're coming to that 5750. We're not far from it. What was this anchor volume weighted average price for? I don't know what that's for. I think that was just a random one. Yeah, and you see SPY, it's like, it's still a negative divergence, but it's like, you can see like this big spike in the green. It's just hedging kind of activity that takes place, and you see these spikes, and I ignore those spikes. So I personally just like to look at the market net flow if I'm looking at SPY or Qs, because it calms that noise down. It's a little bit more of an accurate reading, in my opinion. And also Trady Tick's opinion. That's why they designed it. All right, let's see here if we can come into 557.50. We went over a lot of stocks, man. Holy moly. What do I think of Ethereum? I mean, looks good. I'm looking at Ethereum crypto future or Ethereum futures. But yeah, I mean, I like we're starting to get a buy signal on the Sailor to Shift tool, and I'm a fan. Like as long as we can actually get the official trigger, I'm bullish, right? We're breaking out here, so perhaps there's a substantial move coming if that confirms it. And then we looked at various crypto equities. I think it's an opportunity there. And then this one specifically, like you can have a stop here or a stop here, and it's a pretty decent level of risk. What's the ETF for Ethereum? Didn't it just open up? Isn't there one from like I don't really trade the cryptocurrencies themselves. I'd be looking at the ETFs. How do you find market net flow on Thinkorswim or Interactive Brokers? I don't think that they provide it. I don't think either of them provide it. I definitely know that Thinkorswim doesn't provide it. It's it's completely separate. It's in the Discord. It's in my group Discord. If you go into the query channel, you can see market net flow by typing in a command, and it'll pop it up. Or you can use like there's other services like you can just go to TradeETX website and utilize their service, or maybe they have a trial or something like that. It's more expensive, obviously. But then also, like I think Spot Gamma has one called the Hero Indicator. I think that's pretty much in theory the same thing. Spot Gamma is great. They offer all kinds of stuff. I think Unusual Whales has one. I don't know, a bunch of there's all kinds of services out there that do it. Yeah, if anybody knows the ETF for Ethereum, let me know. It's probably just ETH. It's probably like It's probably ETHE. There you go. There it is. Grayscale Ethereum ETF. I don't know if that's the right one or not, but yeah, there you go. Right. So, I mean, this doesn't look horrible. I mean, the 200 is still sloping up. The 50 days down. The 20 days trying to turn up. So you're going to be fighting the trend here a little bit, but I mean, it's holding itself up, and we're starting to get some decent signals on the Sailor to Shift tool. So you just got to manage risk and just know that it could be some volatile price action. I get to go out tonight. I get to go out. Yay. I'm going to go see a comedy show. So Mike, that's a good question. And I'm actually probably was going to make a YouTube short on that today. I'll give you some insight into it right now. So he's stating that he's brand new to trading and investing, but he thinks that he has a talent for it. I'm just not smart enough, as I've already made $5 with just 50, that's a big move. Should I stay investing or take the risk in day trade? So the comic is Seinfeld. I got to go see Seinfeld. Jerry Seinfeld. It'll be the second time I got to see him. I got to see him at the in New York City, which he came in randomly at the oh my God, what's the theater called in New York City? It's a legendary place. Oh my goodness, Rock City Hall. I don't know why I'm trying to blank. It's a big place there, and he randomly came and did a 20-minute opener for Dave Chappelle, and Chris Rock was there. It was pretty cool. And the crowd went bonkers when Jerry Seinfeld walked on. Go figure, right, in New York City. But yeah, that's who I'm going to be seeing today. Kind of excited. What's the deal with Radio City? Thank you. It was Radio City. Apollo's another one, yeah. Okay, so Mike, back to the question. Sorry. Should I stay investing or take risk in day trade? Okay, so there's 3 buckets, right? It's never one or the other. And people get this so confused so frequently. They say, you don't day trade, or you don't swing trade, or you don't trade, you invest. It's like, you can do all of them, right? I think that if you're investing, this should always be a thing. And investing will keep you from like messing with your accounts. So you have an investment account, you average in, maybe it could be into various mutual funds or ETFs, low index funds, whatever the case is, whatever you choose to do. Mutual funds, they're typically a higher expense ratio, right? So you pay more of a fee, but they typically outperform if you're finding one that's like a large cap growth and, you know, maybe mid cap growth or maybe some small caps or whatever whatever the case is, right? Go to a personal financial advisor or whatever to set up an investment portfolio, or just do something super simple and go to a Vanguard fund and buy VOO, right? Which is a Vanguard ETF of the S&P 500 or VTI or whatever the case is. And you just buy it, right? You just buy and you put in like 15% of your paycheck or your income and you just set it and you forget it. And you just, it is what it is right there. Okay. That's for long-term growth. You buy when it's going down, you buy when it's going up. That's investing, right? Or you find a stock that you like and maybe you put a little bit of money in a stock you like and you just hold it. Okay. That's investing. Swing trading, you're much more active, and it's all about cutting your losers fast and focusing in on what you can control. The only way that you're going to actually be a good swing trader and day trader is by focusing on the 4 things you control. It is not, if you focus on just trying to make a lot of money, I promise you, if that's your main focus, you're going to see success, and that success, if it comes early, is going to be more of a burden to you, because you're going to think you can repeat it, and you don't understand why your strategy all of a sudden doesn't work. So then you look for a new strategy, then you look for new indicators, and it goes in this vicious cycle. You can focus on 4 things when you swing trade and when you day trade. That's what you buy, how much you buy, what you buy, how much you buy, when you buy it, and when you sell it. Okay? You cannot control how much money you're going to make or how far the price is going to go. So swing trading is a way to make some additional money, right? So you're investing, and then maybe you think of it as this. So maybe if you're putting 15 or 20% of your, income, whatever it is, 10% in your investment portfolio, I wouldn't recommend swing trading, because, by the way, swing trading, you can use leverage at some point. I would be using a lot smaller percentage than your investment account. The reason for that is because when you swing trade, you have more beta into swing trading, meaning that an individual stock can move 20% in a few days, 10% in a few days. Okay, so that's how you separate the two. You don't. If all you have is how to make this easier. If you have $10,000 and you're like, hey, should I invest this? Should I do this? Should I do that? Okay, put like $9,000 into an investment account and keep adding to it. Swing trade $1,000, right? And then focus on other ways to make income at that point. And if you make money swing trading successfully with that 10%, then start adding some more into your investment account, and or start to scale up your position sizing when you really do become a better swing trader. And then as far as day trading goes, I'd probably just stick away from it, to be quite honest. Day trading, it does set up and you see some success. But if you're new, day trading will be typically a lot harder. That's just what it is, because you're looking at intraday price action. You're more prone to more swings. You're looking at smaller time frames, a lot more chop. You just got to be a lot more careful. And like I'm primarily a swing trader, but every once in a while I'll day trade. And lately, the amount of day trades I've been taking are significantly lower. But I do end up day trading more frequently when the conditions change in the market. So, for example, right, if you've been around or in the Discord for a long time, when we're in negative gamma territory and we're either below a 5-day moving average or even above it, it doesn't really matter. But in negative gamma territory, volatility typically increases, which makes it good for day trading. So every once in a while, I'll be a little bit more aggressive there. But when we're in positive gamma territory, when we're above a rising 5-day moving average, I'm just swing trading and managing positions. That's all I'm doing. I got a question in the Discord here. So how do I track all my swing positions? Are you at the desk most of the time during the day, or do I step away? I set up at the end of the week. I look at what's going on in the market. I look at various names. I have my tight list, my watch list, and I have an idea of what stocks I want to trade. And if these targets or these alerts are hit, I'll do it. And if I want to enter in early, I'll do a starter position. I'll start small, and I'll go from there. And if it starts showing up in my favor, I'll add to it. And if it starts breaking down, I'll just get out of it. So I just use stop losses. I want to pull myself from the computer away as much as I can, because I don't need to be by the computer. Being by the computer and watching the screen in lower time frames, what it does is your brain will constantly look for what you can get into, right? That's what you're here to make money out of the markets. You're here to extract money from the markets. And somebody who manages risks doesn't need to be involved like that too frequently, right? You don't need to be constantly looking. You can have a quick scan or quick look, have an idea of what you're already going to be trading, and then go from there. If you're day trading, you do need to watch the intraday price action, right? But because knowing that you're constantly looking for a position and try, like, where can I trade? Sometimes you'll just say, oh, I'll enter here. And then you'll fight trends if you go wrong, or, you do stupid stuff. And you want to reduce the amount of stupid stuff as possible. Now, if you only have $100 to trade, right? And you'd want to invest, like, say if you only have $1,000, right? If you only have $1,000, okay, put 900 of it into an investment account. Then use that $100. Actually, I'll take it back. Put $800 into an investment account. Okay, that leaves you with 20%. Take the other 10%, $100, and go buy 4 or 5 books. Okay, or audiobooks or whatever, and then learn about the markets, learn about swing trading, and then the next $100, put it into a Robinhood or a Webull, whatever uses fractional shares, or a Fidelity or a Interactive. I don't know if Interactive Brokers. I think that they might use fractional shares too. I'd have to double check. But then you trade with proper positioning, sizing with $100. You don't go all in on a position with $100. Treat it as if it's $100,000, right? $100,000. Like, be very serious about it. I know you're not going to make much. Like, it's not going to, even if you double your account, which is hard to do, it's going to have an extra $100. Woohoo! Yay! Focus on the positioning, how you plan on, like, and do whatever you can to make 2% a month, 1% a month, which is still 12% a year, right? And then as you move on through your regular job, or you come into more money, keep adding into your investment account. Make sure your consumer debt's paid off, and then add more to your swing trading account when you see success. If you do not see success, do not add money to your account. Only add money to a swing trading account and grow your portfolio when you're seeing success. And when you're losing, right? When you're losing money in your swing trading account, take less positions and less risk until you start to see successful positions play out, and then start to add exposure. If that's the case, what will happen is, when you start doing good, your portfolio, you'll start adding to it, and you'll start adding more positions, and you'll start cranking up. But if you start doing bad, instead of averaging into losers and start doing bad where it dips and falls off a cliff, you're going to reduce the amount of positions you take, and it might just flatten out to steady decrease to the point of you just taking a break. That's the only thing that you have control of, right? Hope that helps out. Yeah, if you only have $100, I mean, you can use $90 into an investment account and use $10 and trade it fractionally. If you're up $5, I mean, just practice learning on $5, and you do fractional shares. So, I mean, just do you take, I don't know, like I do up to 6% to 10% position. So if you were to do 10% position, just to be like, okay, I have $5, I'm trading a $5 account, and a full size position would be 10% of $5. And you treat it as if it's $500,000, Because if you can turn $5 and make 20% in a year, or 10% a year over 10 years, 5 years, or whatever, it doesn't even need to be that long or whatever. If you show consistency for the 6 months of doing that, I think that allows you to add more money into that account and start to scale your positions up slightly. Do it for 6 months consistently. If you do that for 6 months consistently, anybody reach back out to me. We'll bring you on. And then, it'd be crazy. Anybody that can trade consistently for 6 months, that's showing what most people cannot do. Okay? Not even asking much. 6 months. Solid position sizing for 6 months. No freak out moments, and have a strategy and a process that you stuck to. You'll probably be hired as a trader, even if you traded $10. I bet you that if you traded a $10 account and you went to not a prop firm, like a real legitimate prop firm, not like a little place that you pay a combine fee. If you trade equities or whatever and you do $10, not options, right? Fractional shares. And if you traded $10 consistently for 6 months, and you said, hey, I don't got much money, but this is my portfolio. I bet you that, one, it's going to open the door for an interview and potentially an intern, to potentially even getting into the door to learn their processes to become a funded trader through a real prop firm, because most people can't do that. Just a thought. So as far as the S&P 500 price action goes, it's still floating around that 57.50. I was looking to see if it kind of comes into it. Market net flow, we did lose convergence, still bearish divergence. I don't know. If this starts turning green, man, if this starts actually cranking up here and this starts coming off and starts to become bullish, and this is, if we're back below the kind of this 57.50 line, like we crack below it, that could be setting up for a little bit of a nice little bounce towards the end of the trading session. I don't know if it's something that I'd be setting up for myself because I don't think I'm going to be around. I got work I got to do. Can I show the quadrant chart? Do you want the daily or the weekly? Yeah, Mike, if you only started a week ago, maybe check a book called How to Trade in Stocks by William O'Neill. You know what, dude? If you don't even want to buy a book, there's this thing called Hoopla. Actually, dude, I'm just going to share the video, or can I post it here? No. Wait, how do I do that? Give me a second. Oh, yeah, I'm here now. Hold on. Educational videos. Check this out, dude. This is for everybody. Here's how you get some free books. Legally. This is a hella old video. Yeah, do this. Well, if you're trying to change the future, Mike, too, and you're only 19, man, you're doing the right thing. But just know that patience is going to be your patience is going to be your friend, obviously, right? And don't be in a rush. If you're in a rush, you make bad decisions. So learn from other people's mistakes by researching, reading books, right? And then going from there, man. And just taking it slow. Don't be in a rush. There's no rush. Right? I know it's going to feel like there's a rush, but trust me, there's not. As you progress in your career and what it is you do for a living, you're going to end up making more money later down the road anyway, or sooner than later. And then you just constantly look to better yourself and better those around you. If you're new into like the corporate world, if you're getting into a job or whatever, one of the biggest takeaways that I got from the corporate world, which by the way, I don't have a formal education. You're probably significantly smarter than I am. One of the things that really helped me out was the networking that I built within the framework of my industry. So no matter what position you were or who you were, I was helping other people out. I was building them up. I was doing whatever I could to make them look good because their education and everything got them to higher levels and how good they were. But they remembered the guy that always had a good attitude and always was there to show, like, do the hard labor, do the hard work. And that's the only reason why I got pulled up through the ranks when I worked at. The only reason why I got pulled up in the ranks, amongst some other stuff, within the corporation, the Fortune 10 company that I worked in, or Fortune 20 company that I worked with for 13 years, right? It definitely wasn't my education at all. I talked fast. I was all over the place. I was creative. I did things that I try to always think of things like how to stand out, right? So in an interview, right? If somebody was recommending me to an interview, which is, many of the times, like, oh, he doesn't have, I saw his resume, but he doesn't have X, Y, Z or whatever. So my thought was like, okay, how can I stand out? Because one, I don't talk smart. I don't have the education, but I am creative and I have all these little, things. So how can I shock and awe and really make the person that recommended me, that got me the interview, how can I make them look good? There was a time where I did an interview back into California from Oregon. The day of the interview, on the desk of the interviewee, the person that was interviewing me, I had UPS hand deliver them a package that included physical copies of my resume, my cover letters, recommendations, and everything. So it showed up on day one, and he said, "Oh yeah, I got your interview, I got this," and then also an action plan. We had a 30, 60, 90. Mine was a little bit more intricate than a 30, 60, 90 plan. But these are just some things that you can do to better yourself inside of a career to make more money, right? It's not just trading that's going to make you money. I went on a tangent there. Sorry. Let's take a look at these markets. Adding one push-up a day goes a long way. Hey, that's a good point. Or like if you're driving, if you're not driving, if you're in a ship, right? If you're like in the wide open ocean and it's a cruise liner and all they're off is by like 1 degree, not even 1 degree, less than a degree, 1 knot, right? Or whatever it's called. Over the course of time, if they keep going in off that 1 knot or 1 degree, if you look hundreds and thousands of, not 100,000, but thousands of miles down or hundreds of miles, whatever the case is, the difference where they're going to be by just that small little adjustment every day is going to make a huge impact of where they end up at, right? Okay, so back to the book thing. So that link was a YouTube video that I made a long time ago. It shows Hoopla. Hoopla, if you have a library card, you could get like basically it's like Audible, but for people that have a library card, so it's free. And there are some books in there. I still have my Hoopla. I still pull it up all the time, man. Let me go to Hoopla. I'll tell you what book to get from there right now. Actually, I talked about some in there. I don't know if they're still there or not. I don't know when they come in or when they come out, but and I don't know. There's so many different books in here. Mastery. That's a summary. The Successful Investor by William J. O'Neill. I think that's worth a listen to. How to Trade in Stocks might be in there too, but I think you really need the physical copy because it shows chart decks. So sometimes that helps a lot. And you can only learn so much from a book. Sometimes you just use the online resources, right? Like videos. But yeah, I just search books, search different things there. Psychology books. That's a huge boost to trading. All right, we're just trading around that 57.50 still. I was kind of just waiting to see if we come into it. Went over so many different stocks today. I'm kind of just yammering on now. I'm tired. I need some air. Still haven't made it into this this little area here. Happen to be the week to date anchored volume weighted average price. That'd be really cool if we come down into here. Looks like we're about to tag it. Oh, cool. Good stuff, Emma. All the streams you've gone to are not really teaching, they're just bots. Yeah. Well, I promise. Well, there's pros and cons to it, right? Some streamers are just trying to trade and show their skills. Others are trying to just kind of help out and educate. Or people go to streams not to learn, but to get like their handheld. It's not going to happen here on this stream. I don't do any hand holding, or I don't tell people what to do with their money. I give my analysis on things. I look to see how the market's shaping up, educational stuff. That's about it, man. That is about it. Thanks, McKenzie. McKenzie's been around for a minute. Oh, I see McKenzie in here. What would the level be in the queues? Level 4 what? What did I say again? I forget. If it was to come down or whatever. I don't know. I'd just be watching the S&P 500 because if the S&P 500 bounces from these levels, chances are it's because of Qs. All right, because of the larger market cap names. Market net flow, it's back to bearish convergence, still bearish divergence. It tried to go for it. It might still. This is a good sign here, seeing this pick up. But we want to see the red come down here. It's not a horrible look for a bounce. It's just early. Right? It looks like it's pulling right in there now. I typically then from this point I like to look at these smaller time frames. We'll go to like 5 minute and see if like it puts in a higher low. Like maybe we undercut and put in a higher low and see strength. It's never the case though with me. Like it'll go like this and go bing, or it'll go like this, bing. Every once in a while it plays out well, but we'll see here how this trades up. It definitely looks like it wants it, so just get it done with already. Get it done with already. And then I want to see this get more positive. And if we do get a big flush, it's like right there. Come on. Just go. Just go. Come on. Just get it and get it done with. Let me see if this is updating here, the 0 date levels. No, it's still not updating. That's annoying. Okay, yeah, so what I was saying was if we do get a bigger flush, yeah, just watch the week to date, like in this little trend test here that I kind of put a little alert at. That'd be a pretty large move. Not impossible. I'll wait around. Getting a little negative divergence on the ES. We just tagged it there. Okay, there it is. On the what time frame? 15-minute for ES. Positive divergence? Oh, this negative divergence. No. The little. Was it? Oh, this one right here, maybe. That negative divergence? Yeah, it's a good little catch right there, that's for sure. Good catch. Okay, so we're there. 57.50. I'm on the 5-minute time frame. Market net flow doesn't look good still, so I'm not looking to buy this dip. It's just what it is. Perhaps maybe if price comes off more, maybe look to trade it, but still I'm just kind of on my hands. Chilling on my hands. But yeah, if I zoom out, what are we doing? We're just at the call wall. Bing bong, bing bong, bing bong. Ping ping, ping ping. Come on. Flush. Flush us. Flush it down. Flush it down and scare everybody out and then rip right back in everyone's faces. Anybody got good plans for the weekend? Anybody doing anything fun? We both have a scene. Excuse me. Let's take a look at the individual names. What's going on here? Apple's still up on the day. Microsoft's down a 0.5 point. Actually, it's pretty good to see this. 0.5 percentage, and this one's actually kind of picking up. Nvidia, dude, it's Nvidia. Nvidia's holding his market down. Google's up. It's coming off a little bit. So, if this starts falling too, and Microsoft further, that's not going to be good. Amazon is pretty much at lows of the day, and then Meta also kind of coming off here. That's the pressure on the market right there. Mainly Nvidia. Let me pull up Nvidia actually. Let's see. Oh yeah, we marked about some levels on Nvidia earlier in the trading session. Let's see where we're at now on the 15-minute time frame. Pretty much in the same exact area. Yeah, we just came right into the 5-day. It's inclining, selling off a little bit. I think what did we say the level was? Yeah, like 119-ish, 119.50. Could be a level where it potentially bounces. If that flushes down to 119.50, if Nvidia does, that could be the flush that brings down the SPY more into this area. Let's take a look here. Yeah, we're doodling at the 57.50, no surprise. Market net flow, ooh, it's not looking great, man. This is coming off and this is still holding up there. Yeah, I'm just not trading that. don't feel like trading it. You do you, boo. Bing bong, bong ping. Pew pew. That's funny. We bouncing here? I mean, it would make sense. We're just at a key gamma level. I'm going to the 2 minute. Go like this. Watch. I'm going to show you a trick. From when we started to see this move and then it got faded. We'll go retest that anchor volume weighted average price. Skibbity bibbity bibbity beep. What's gold doing? Nvidia's starting a little bit bounce here too. What's gold doing? Ooh, what's silver doing? Dinky. What's my miners doing? Come on, miners. Oh, dude. My dust position's probably up big time. Yeah, bruh. I took half of it off earlier. Actually, now I'm gonna probably remove more because I'm not much of a shorter. Let me go into my stuff. That's funny. Sorry, I'm quiet. I'm just exhausted. I'm just seeing how price action responds in these areas, just so you can see them too while we're live. Yeah, I'm up 6%. I'm just closing that out. I don't really care about holding this open. All right, I'm out of my miners short. I think that there's more room to potentially fade, but I just don't care, especially if the dollar bounces and if that affects silver. But I'm just not a shorter. I'd rather just have more cash on hand. Yep, that's about it. That's all I'm doing right now for the portfolio. Oh, there we go. Okay, so there's the test of that anchor volume weighted average price. Let's see if we can break through it. All right. Yeah, I think I'm gonna call it a stream, or call it for the stream here. If you like comedy, you must see Jimber. I'll have to look that up. Is he? Is it like have a? I want to put it down. Does he do shows and stuff? Oh yeah, dude. Yeah, that guy's. Yeah, I've seen him before for sure. Is he touring right now? Okay, so we saw a little bit of a bounce from 57.50. Now, so first and foremost, okay, before you go crazy, what are we seeing here? Well, it's a bounce in a shorter term downtrend, right? And they sometimes get faded. Okay, so it's very common to see it do this after hitting a main area of gamma. Okay, so we saw a nice little bounce there. Now, if I anchor a volume weighted average price to the swing low for the day. Shoot, it's getting pretty tight right here. So from the low of the day, which is, this is a 2-minute time frame. So what you'd want to see from this swing high, this swing low, you'd want to see it break above, hold it, and you'd want to see a higher low established, right? A higher low established. I personally would like to see market net flow get a little bit more positive, but you are seeing it go back to gray convergence. And when you have a negative divergence and it turns, gray here, all it's telling you is the SPY is no longer moving with market net flow, and you can see counter trend moves. That's all that means, okay? So if you're long, I mean, if you're day trading or scalping, maybe a stop under here and or just this swing low, and then go from there and seeing if you're trying to catch like a stronger move or a stronger bounce. I'm not bothering with it right now. But yeah, hopefully that, yeah, there you go, Nolan. It's an Anchor VWAP pinch, it's termed, from Brian Shannon. Which, if you haven't read that book too, that's a great book. Both of his books are. Oh. All right, ladies and gentlemen, that's all I got for you on today's stream. Hope it helped out, gave you some good insight. We went over a lot of names. I gave you a bigger look into kind of what it is that I do here. If you haven't subscribed to the channel, subscribe to the channel. That'd be greatly appreciated, Shaka, 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 shaka. See everybody out there on Twitch. See ya T Rabbit. See ya XEE. See ya Exotic. Appreciate y'all being here. Thanks, FT. Man, FT's been here since the morning. And everybody out there on YouTube. See ya, Andrew. See ya, Mike. See ya, Felipe. See ya, J Haas. John, Tom, Jalen, J Haas, Mike. Everybody who left some comments that I see in here. If I haven't mentioned you. Sumitra. See ya. Pharma. See ya. Scott. Later. Angelo. See ya. The emoji, that's hilarious. See ya, Raj. Love set match. What's up? And see ya. See ya, Mitkensky. And Black Diamond. Hey, later, Black Diamond. Good seeing you back there in the chat, by the way. Yep. You guys have a good weekend too. Later, Hugh. All right, tune in out. See you guys.